In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself. In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself. In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't.
Good morning. Good morning, members. Good morning, everyone. Good morning. Okay, I need a little projection in addition to the mic. I just wanted to let you know that we're going to start shortly, so I'm asking everyone to settle down, find their seats. I was going to say so that we can start promptly at 10, but as it turns out, it's 10 o'clock. So, Chairman?
Yes, sir.
Would you like to begin by...
Good morning, shareholders. The AGM will begin now. Okay, we ask that you be seated. That has already been done, so that we can begin on time. Please stand for the playing of the national anthem.
Our national anthem represents the beauty, pride, strength, and resilience of Jamaica and our people. My name is Ziggy Marley. Please stand while we honor Jamaica, our culture, and our history.
The annual general meeting of NCB Financial Group Limited is now called to order. Mr. Secretary, will you please confirm that a quorum is present, sir?
Chairman, I confirm that a quorum is indeed present.
If you'll permit me to address a few housekeeping matters. For those here in person, please place your mobile phones on silent or vibrate mode. Note the emergency exits on the left and right of the room. Any unauthorized recording of this event and the persons in it is strictly prohibited. However, an official recording of the meeting will be available.
Thank you, Chair. I would also point out that the meeting is once again this year being held in a hybrid format. We will now invite Stephen Ricketts, Chief Financial and Operating Officer of NCB Capital Markets Limited, to pray.
Let us pray. Heavenly Father, we thank you. We thank you that you are sovereign and there is none like unto you. You are the giver of life, and it is in you that we live and have our being. We thank you for today. We thank you for the NCB Financial Group, the shareholders, the employees, and the many stakeholders whom we serve. Father, as we come to this annual general meeting, we pray for your leading. We pray for your guidance. We pray for your direction. We pray that you take full control even today. And let all that will be said, done, and accomplished be to the honor and glory of your name. It is you that has brought us thus far. And Lord, we know that it is you that will continue to bring us through, to weather every storm and every challenge that we face. Father, we continue to look to you for guidance and for protection, for covering. And in everything, we'll be mindful to give you thanks. For thine is the kingdom, the power, and the glory, forever and ever. Amen.
Members, we will now observe a moment of silence for team members, pensioners, and shareholders who passed away in the last year. These include two of our team members, Trudy Ann Samuels and George Ricketts, who we lost just in January of this year. Let's observe that moment of silence now. Thank you. The chairman will now go to the...
May their souls and the souls of all the faithful departed, through the mercy of God, rest in peace. Amen.
Thank you, Mrs. Clark Allwood. We'll now ask the chairman to take the podium to deliver his welcome and opening remarks.
Thank you very much, Mr. Secretary, Dave. Ladies and gentlemen, welcome to another AGM. But before I start my presentation, I'd like to acknowledge our newbie here, Mr. Dominic Rampersad. Dominic, please stand. Dominic is our newest director, and he will be hopefully elected here this morning, confirmed here this morning. We'll also note the physical presence of our directors from the National Commercial Bank, Ms. Sandra Glasgow, Mr. John Bailey, Ms. Alison Filbert, Mr. Roger Blissett, Mr. David Roberts, interim CEO, NCBJ, Ms. Cherie Martin. Executive Vice Presidents of NCBJ, Ms. Tanya Watson Francis, Mr. Perrin Gale, Mr. Angus Young, also CEO of NCB Cap Markets, Ms. Jacqueline Delisser, CFO, NCBJ, and Head of Investor Relations. Other officers of NCBFG Limited Financial Group include Mrs. Mokisha Ricketts, Group Chief Audit Executive, Ms. Mishika Seymour Sr., Group Chief Compliance Officer, Mr. Richard Lukin, Group Chief Risk Officer. We also would like to acknowledge the presence of the President of Guardian Life Limited, Mrs. Megan Miller-Brown, the President of Guardian General Insurance Jamaica Limited, Mrs. Karen Bura Singh, President. Online, we have Mr. CEO, Guardian Holdings Limited, Ian Chinapu, and Clarion Bank Limited. Two of our eminent subsidiaries, Mr. Ian Truan. So, we, as board members here, are appointed by you, shareholders. We, as you've appointed us to be the stewards of this magnificent organization. This organization harks back to 1837. It's 189 years now. 189 years old. So we see our responsibility as stewarding, making sure that while we carry this baton, it is we elevate the institution to one that when we pass the baton, it will be in fantastic shape, recognized for a few things. Being customer-centric. I'll start off with that. Being customer-centric. Having strong governance. And thirdly, making sure that this business continues to be efficient. So those are the three characteristics that this business will have when we serve our time and pass the baton to the next generation. So that will become those three characteristics: efficiency, governance, and customer experience. EGC are going to be in the constitution of the organization. So ad infinitum, the bank will keep compounding on those three characteristics. EGC. So, 189 years. We are known to be the People's Bank. And this morning, I had a conversation with Mr. John Bailey here, Director John Bailey, and he said, Mike, what do you mean by the People's Bank? What is meant by the People's Bank? John, you want for me to embarrass you? You want for me to ask you to come? So I said, John, the People's Bank, firstly, banking and financial service, banking and insurance are givens for financial institutions. They're just table stakes. What is not a table stake is creating wealth and preserving wealth for our clients, all our clients. So the People's Bank is one that will provide financial services from captains of industries to that's at one bookend, one end of the continuum, to at the other end of the continuum, those who are unbanked and should be banked. Because they too want to create wealth. They too need to be included in the formal society. Because you cannot create wealth unless you're included in the formal society. You can't. So we want, that is the definition of what the People's Bank is. We cut across, because we're the largest financial institution in Jamaica, it is our responsibility to take care, uplift all citizens. That's the People's Bank. Right? Was that the answer, sir? Okay. So, we're the People's Bank. We're the largest bank. We are here to serve all echelons profitably. to create, as I said, to create and maintain wealth for all echelons. And I want to go to one end of the more difficult end of the continuum, which is someone who came from nowhere and would still love and still whose aspiration is to create wealth. And in 2002, the same day I bought the bank, March 23rd, 2002, I left the office of the Minister of Finance and went down to Half Moon Hotel. When I checked in, got to the villa, the shower wasn't working. So they sent a gentleman, a maintenance worker, to fix the plumbing. When he fixed the plumbing, we had a conversation. What's your name, sir? My name is Roxroy Carr. Roxroy, so what would you like to do with your life? He said, Mr. Leachin, I would love to be rich, sir. Roxroy, how are you going to do it? He said, I don't know, sir. Can you help me? So I said, okay, Roxroy, let us talk about how wealthy people become wealthy. Which we did. So we had an hour-long conversation. Now, there's a saying, ideas are a dime a dozen, but those who implement them are priceless. Success is 2% strategy, 98% execution. Now, Roxroy took me seriously, and he executed. And every time I came back to Jamaica, at least once per year, I didn't come to Jamaica once per year, but whenever I came, at least once per year, I would check in with Roxroy to make sure he's on target, on course with what he had set out to do. On the December 2023, I think it's December 19th, you can Google it. December 19th, 2023, the Observer had an article entitled, "The Sky is the Limit. Google it at your leisure." And it was all about Roxroy Carr. This gentleman transformed himself from a maintenance worker to I won't say to embarrass him, but a very wealthy person. This gentleman was taken from the base of Maslow's hierarchy, which would be, I need food, I need water, I need shelter, to today, he's at the apex of Maslow's hierarchy, which is, I'm self-actualized. I can now look forward to my children going to university. I can look forward to passing on my assets to my kids. And most importantly, I can be a philanthropist. I can be a philanthropist, which he is. And therefore, I can help build a better Jamaica, which, by the way, is the mantra of NCB. And NCB's mission, therefore, is to make many, 3 million Roxroys and Roxroyanas. Okay? That's the People's Bank. Okay? So, we want to be known to be the caring bank, an empathetic bank, an uplifting bank, a solutions-oriented bank, the People's Bank. We want to be the citadel on the hill in terms of financial services, not only in Jamaica, not only in the Caribbean, but by any global measure. We want to be that citadel on the hill, representing the best of financial services. And we're going to do it. Okay, so the question is, how are we going to do it? How are we going to do it? Well, we have a simple focus, but there's a saying. It may be simple. It may be simple, not easy. So what's the focus? As I said earlier, the focus of this organization is we're going to make sure, and built into the Constitution, Dave, we have to rewrite the Constitution. Built into the Constitution will be the following three letters. EGC. efficiency, governance, and customer experience. That's the only way we can be long-term sustainable and continue to be relevant to customers and society. Now, the highest value add we can give to the country, our country, Jamaica, or region, the Caribbean, the world, is to make, in this case, we're here in Jamaica, make Jamaica wealthy. We're here in the Caribbean, make the Caribbean wealthy. That's the highest value add we can give. And how are we going to do it? One customer at a time. That's how we do it. Okay, those of us who did physics, we know that if you want to increase speed, there are two things you have to do. You have to minimize friction, and you have to increase horsepower. Simple. Not easy. So whatever frictions there are to efficiency, we're going to slap it. We're going to deal with it. We are dealing with it. Whatever friction there are to governance, we're going to make sure we deal with it. Whatever friction there are to the customer experience, we're going to deal with it. So we're going to minimize friction by dealing with those three, the friction implicit in those three letters, EGC. Simultaneously, remember, you have to minimize friction and you have to increase horsepower. Simultaneously, we're going to increase horsepower in terms of dealing with inefficiency. We're going to increase horsepower with respect to dealing with governance. And governance is not just the board. Governance is with everybody, every staff member. Governance is about discipline. And we're going to increase horsepower with respect to the customer experience. Now, one massive friction that hasn't been talked about enough in Jamaica, but we're going to talk about it today because it affects every single shareholder of every single financial institution in Jamaica. And by extension, it affects every single consumer. It affects how quickly we grow this country. And the big elephant in the country, in the room, is asset tax. Asset tax. Now, shareholders, in 2012, asset tax was brought on as a temporary measure. But by the way, when I saw that, it reminds me of in Canada, taxes were brought on in 1919 as a temporary measure to fund World War I. Okay? Temporary measure. So that's usually how it starts. So asset tax was brought on as a temporary measure in 2012. Temporary for 3 years. It's still here. Through both administrations. It's still here. So what does that mean to us as shareholders? Well, guess how much NCB has paid in asset tax since 2012? One guess. US dollars. Anybody can guess? Other than Malcolm, CFO. Anybody can guess? How much? 3 billion? 3 billion? 25 billion? Nearly. But about 75 billion? I know in US dollar terms, and you can multiply this by 160, it is 194 million US dollars since 2012 in US dollar terms. $194 million that did not go to shareholders. Pardon me? Well, you can ask the question when the question time comes, okay? What does this mean in terms of each shareholder? Well, let's talk about last year. Last year, NCB's asset tax was 2.6 billion, which we have 2.5 billion shares outstanding. So it works out to be about $1.05. $1.05 per share. So every shareholder, right, paid per share $1.05 in asset tax. So what does that mean? Last year, we paid 3 dividends of 50 cents each. 3 quarters, we missed one, the first quarter. Why did we miss it? You know why? Because we had to pay $2.6 billion in asset tax in the first quarter. That's why we missed the dividend. So it is a real and present shareholder effect. That's last year. So last year we paid $1.50 in dividends. Add to that, if we didn't have asset tax, what would it have been? $1.50 plus $1.05, right? Which is a dollar, how much? $2 and how much? $2.55. That's what we should have gotten. How much did we get? $1.50. What's the percentage? What's the pay cut from $2.55 to $1.50? How much percentage that? 41%. What would you like to take a 41% cut in salary? Anybody? Well, that's what shareholders took last year. Okay? So let's call a speed a speed. So anything to do with that's going to affect shareholders' value, we have to talk about it. That's why I'm talking about it today, because it has never been spoken about here. As of today, it will be spoken about until it is resolved. So, that's at one extreme. So that pensioner who bought NCB shares for the income got a 41% cut in income last year. Okay? That's at one extreme. Or the other extreme, you have the controlling shareholder, which you may not have any empathy for, right? But I'm still a nice guy. The controlling shareholder, 52%. What is 52% of 194 million? What is that? Exactly $100 million. Okay? So that's what AIC, the controlling shareholder, did not get over the last 12 years. Okay? Now, we all know, because the most advertised number in Jamaica is 94. We don't know 94, right? That is the amount of money AIC had to come up with December the 31st. 94. Is 94 less than 100? Pardon me? No, you can see the effect. No, you can see the effect of asset tax. So, ladies and gentlemen, we are here as the custodians that you have appointed, you as shareholders have appointed, us as directors, to make sure that we deal with all the issues relevant to making sure your business is in good stead for the next generation and the generation thereafter. Thank you very much.
Thank you, Chairman. This year, the Chair has also asked that we have some of our committee members give brief remarks. So we will start with the Lead Independent Director and Audit Committee Chair, Mr. Gary Brown. Director Brown has over 40 years of experience in the financial services industry and is currently also Chairman of Mercy Ships International. Gary?
Thank you, David. Is this on?
Again?
Hopefully it's on.
Yes.
Okay, terrific. Thank you. So good morning, shareholders and guests. So as chair of the Audit Committee, I'm pleased to provide some brief remarks on the activities over this past financial year. Our committee is composed entirely of independent directors, Sonia Goff, Howard Shearer, and myself. Our mandate is to assist the board in overseeing the group's financial and operational reporting, our system of internal controls, and both internal and external audit processes. Consistent with best practices globally, we invite Pricewaterhouse's engagement partner and senior representatives to attend all of our meetings. This provides the committee with direct access to their specialized expertise, but more importantly, it gives the auditors a deep understanding of the group's operations. Our charter requires us to meet 4 times a year. This past fiscal year, we met 7 times, and PwC is with us in all but one of those meetings. PwC did not attend the meeting where we reviewed the annual report. They do that separately prior to it being released. To further strengthen oversight, the Audit Committee maintains a policy of, at every meeting, having what we call in-camera sessions with both the internal and external auditors. Those meetings occur without management participation. This gives us the opportunity to make sure that without management, we can have clear, direct dialogue with our audit partners, as well as our internal audit staff, to make sure there is absolutely clear understanding of the issues that we're dealing with, and it's able to essentially probe our tone from the top, whether our management is in fact focused on these essential controls of running a financial institution. So as we move into 2026, I just want to assure you that we are committed to making sure that this organization is financially sound, that all of our controls are rigorous, and that we are making sure that this institution can produce financial results that all of us can be proud of and all of us can count on for our ongoing requirements, not only to ensure safety and soundness of this institution, but also ensure that you as shareholders can benefit from dividends that we can generate. Thank you very much.
Thank you, Gary. I now invite our Group Risk Committee Chair, Mrs. Arvinda Barath, also an independent director, to speak. Now, Director Barath has over 30 years of experience in banking, regulation, and technological innovation. Director Barath.
Thank you, Dave. Can you hear me? Good morning, everyone, and welcome. As chair of the Group Risk Committee, I'm very pleased to report that the committee met as intended 4 times last year. Our responsibility is pretty much to oversee or provide oversight over the management of risk across the group. So we look at the enterprise risk management frameworks, we look at the governing policies, we make sure that they are fit for purpose and are doing the job that they are intended to do. We maintain oversight on emerging risks as well as traditional financial risks. So emerging risks like climate, emerging risks like digital risks, including the impact of artificial intelligence in financial services and cybersecurity, etc. During the year, with every meeting, we had representation from the heads of risk from all of the group companies. So Guardian Holdings had representation, Clarion Bank, as well as, of course, the NCB Bank here. So they provide us with updates in terms of how risk is being managed, and therefore we can develop a view on the group's risk posture and profile as we go along. Our focus as we move into 2026 is going to be on strengthening our risk oversight, making sure that there is that we harmonize how risk reporting is done, how frameworks are being implemented, and how overall the risks are being managed lower down in the subsidiary levels as well. We want to see a more forward-looking and a more deeply embedded risk culture. I mean, our eyes are not moving away from growth. They are not moving away from client experience or any of the things that are important to the bank, to the group rather, as the chairman has already said, but with responsibility, with an eye on risk. So we hope that we keep the soundness and stability of the institution into 2026 and beyond. Thank you.
Thank you, Arvinda. Our Corporate Governance and Nomination Committee Chair, Mrs. Sanya Goff, again an independent director, is a leading Jamaican corporate attorney at law with experience in pensions, corporate law, and financial regulation. Director Goff.
Thank you, Dave. Morning, everyone. The committee's responsibility is to ensure that the board remains properly constituted, independent in judgment, and aligned with the regulatory and strategic demands of a financial group of our scale and complexity. Over the past financial year, we strengthened our fit and proper due diligence processes in light of updated regulatory guidance and our own expectations of rigor. As a committee, we're clear that governance must evolve alongside the environment in which we operate. We continued our succession planning work, continually reviewing the board skills matrix and future needs to ensure depth of expertise in areas critical to the group's long-term direction. We also kept under review governing structures across the group to ensure clarity of accountability and consistency of standards at subsidiary levels. The committee conducted its annual assessment of director independence in accordance with the Banking Services Act and applicable corporate governance codes. As at today, 75% of the board is independent. That deserves a round of applause. And this supports objective oversight and disciplined engagement with management. In the year ahead, we will remain focused on board effectiveness and the continued strengthening of the group's governance framework so that it supports performance, resilience, and sustained success. Thank you.
Thank you, Sanya. We now move to the next item on the agenda involving the notice of meeting. Now, the procedures of the meeting will include the proposing and seconding of resolutions. The specific wording of each resolution is as read in the meeting, regardless of whether the wording shown online or on screen is identical. For those persons joining online, please allow me a moment to highlight and remind you of some key information. Questions and discussions on the resolutions will be taken through the Q&A functionality only during the meeting. We do have some questions received before the meeting, but sending them by email at this time is only a recipe for getting them ignored. Please use the Q&A functionality at this time. Voting will be done with the instructions provided when each resolution has been put forward. A pop-up screen will appear stating the resolution number, for example, Resolution 1, and the text for the resolution. Please click on Vote Now and select For or Against, depending on your choice. 30 seconds will be allotted for voting online for each resolution. Now, for security reasons, you will not be able to log in and view the meeting with voting capabilities on more than one device at a time. The invitation link you received, and you should already know this, will only work on one device, so please do not share the link. Remember, each shareholder has only one vote for voting by show of hands. If you are registered as being present in person, you will not have the capability to vote online. Now, those shareholders present in person will be asked to vote by raising their regular hands, not their virtual hands. which should bear yellow wristbands like these. We'll be looking for them, or, once again, won't be seen. The hand won't be seen. Well, it will be seen but not seen. You understand what I mean? The chairman will be asked to declare whether the resolutions have carried. Members will be asked to propose and second resolutions, and we ask that as you do so, you identify yourselves by name. Please also ensure that you are wearing your wristband and that it is visible when proposing or seconding a resolution. This is to ensure we are taking motions from shareholders. The notice of annual, and please don't be offended if I ask you to put up your hand so that I can see the yellow band. The notice of annual general meeting was circulated via post, published in the press, as well as published on the websites of NCBFG and the stock exchanges in Jamaica and Trinidad and Tobago. So let's see if we can test all of what I just said now. If you are sleeping through it, you will now get a little test run to see whether you can sustain regardless of the slumber. So I'm going to ask that the notice of annual general meeting be taken as read, and therefore that someone, meaning a member, proposes the following resolution: that the notice of this meeting as circulated be taken as read. A question? All right, let's hear the question. Mr. Golding, I think you need to move to the mic because the meeting is in hybrid format, so the persons who are online need to hear the question if you're being recognized.
Thank you. Thank you, sir.
Mr. Golding.
Good morning.
Good morning.
I am allergic to those straps, so I advised outside, unless they had an ambulance ready to take me away, please do not strap me. I'm asking your permission, the permission of the chair,
All right.
to exempt me from
All right.
that.
So here's
permission.
what I will do. Although I do know you, Mr. Golding, clearly, I don't have the register of over 40,000 shareholders in front of me, and I do believe that I have my chief auditor executive in the house. So what I'm going to do is to have JCSD, the registrar, verify you, and then we can do the exemption. In the meantime, I'm going to let somebody else move this particular motion, if that's fine with you.
Thank you, sir.
Thank you, sir. Woo, I see it. Did you see it? All right. Can we do it again, though, with the microphone so that the persons online can hear?
I am Anatole Clark. Good morning, everyone. I am Anatole Aileen Lawson Clark Allwood, shareholder, and I so propose.
Thank you. We have the motion duly proposed. May we have another member second the resolution?
Marcia Nichols.
I'm sorry. Ms. Nichols, I believe. Could you go again with the full name in the mic?
I am Marcia Maria Nichols.
Thank you. All right, so it has been duly moved and seconded, and the resolution will now be put to the vote and should appear on members' screens now for those online. So to the members joining online, as a reminder, please indicate by clicking on the Vote Now button and selecting for or against on the AGM platform. Please do so immediately, as the online voting time is about 30 seconds. You don't think I'm tall enough to... What's going on here? The numbers will show in the room. While we wait for online voting, we will take the voting in the room. To the members present in the room, if you are in favor of the resolution, please indicate by raising your hand, whichever hand has the yellow. All right, thank you. And those against? All right, we're done in the room, and I am seeing in the room downstairs, the overflow room downstairs. I actually, can I get that visual again? I didn't see. Okay. All right, we now are just awaiting the results from online.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
So the results are showing on screen, and the persons online should have seen what took place in the meeting. And so, as you know, there is a majority in favor. Chairman, I will ask you to declare.
I declare the motion carried.
Thank you, sir. A number of proxies have been received, and a proxy register is available for inspection by interested persons. And persons may contact the registrar either here or afterwards if they wish to do so. Next, in respect of the minutes of the previous annual general meeting, as usual, the minutes of last year's AGM were made available online, as well as the full recording of the meeting. And so I trust that members will agree and accept that the minutes accurately reflect what occurred at the meeting, bearing in mind, of course, the availability of the full recording. Chairman, we'll invite you to lead us on the next item.
Here we know, Dave. I now ask that the Chief Financial Officer, Mr. Malcolm Sadler, deliver his report on the financial performance for full year 2025 and for the first quarter 2026.
Thank you, Mr. Chairman. Chairman of the Board, Honorable Michael Leachin, Lead Independent Director, Gary Brown, Group CEO, Robert Almeida, Directors all around, Dave Garcia, Corporate Secretary, our fellow executives, all our shareholders here and online, all our guests joining in person and online as well. Good morning. And thank you for joining our AGM today. I'll present the key highlights of our financial performance for the financial year ended September 30, 2025, as well as comments on the results for the first quarter as well, December 2025. I'll also examine the major drivers behind our performance and highlight the continued strength and resilience of our group. For the 2025 financial year, the group remains steadfast in executing its strategic priorities. We intensified our focus on operational efficiency, expanding product penetration, strengthening customer relationships in our key segments. These efforts created new avenues for growth and ensured that we deployed capital prudently and effectively throughout the group. Against this backdrop, for the financial year, the group recorded consolidated net profit of 36.9 billion, and that's a 71% increase, or 15.3 billion over the prior year, September 2024. Consolidated net profit attributable to stockholders, to all of us here, including Chair, attributable to the shareholders, 23.1 billion, representing a 73% or 9.8 billion increase over the prior year, resulting in an improvement in our key financial metrics, mainly return on assets up to 1.56% from 0.96%, return on equity up to 12.46% from 8.49%. A significant contributor to our growth for the year was a gain on the sale of a subsidiary in the Netherlands, 15.1 billion, and that's an insurance brokerage that we have in the Netherlands, that we had in the Netherlands, that we sold. The annual contribution from this subsidiary is fairly immaterial on an annual basis, so it should not impact the financials in any material way in terms of that disposal. However, the gain from the disposal, combined with strong revenue across our business segments, drove gross revenues to 361 billion from 323.6 billion, up 12% or 37.4 billion. Operating revenues total 144.3 billion, increasing by 20% or 24.3 billion over the prior year. Net revenues from banking and investment activities of 143 billion improved by 18% or 21.9 billion, driven by, as mentioned earlier, the disposal of our Netherlands-based insurance brokerage, also higher net interest income driven by improved yields and lower interest costs, resulting in improved net interest margins. The higher revenues were moderated by an 18% or 1.6 billion increase in credit impairment losses. There were higher impairment losses mainly in our life and health insurance, consumer and SME, and wealth asset management and investment banking, and also the payment services segment. Insurance service result improved to 25 billion, an increase of 6 billion or 33%. This segment was driven by the property and casualty segment, delivering a 56% or 4 billion uplift, while the life, health, and pension management segment grew by 2 billion or 21%, supported by continued insurance revenue expansion. There has been consistent growth in our core business across the group's insurance and annuity product offerings in the English, Dutch, and in the Netherlands, Dutch Caribbean that is, and in the Netherlands market. This increase was partially offset by higher net insurance finance expenses, which rose by 20% or 4 billion over the prior year, driven primarily by the life, health, and insurance and pensions segment. Insurance finance expenses include the net investment income associated with insurance products that carry an investment component. While this outcome was less favorable in relation to the group's insurance liabilities, it provided a positive benefit to our clients who earned higher investment returns during the year. Operating expenses increased by 4.7 billion or 5% to 99.4 billion. Staff costs, which accounted for 54% of total costs, increased to 53.5 billion from 50.2 billion, an increase of 7% or 3.3 billion. This increase was driven mainly by negotiated wage adjustments and higher separation-related costs. It's important to note that the 2024 financials benefited from reversals in over-accrued separation costs in 2023, while the 2025 financial year reflected restructuring expenses of certain Jamaican subsidiaries within the group, along with voluntary separation costs. The internal restructuring, and which you would have seen in the costs that I just mentioned in terms of separation, the internal restructuring was in relation to the pension fund administration, which has been shifted from NCB Insurance Agency to Guardian Life Limited, and also centralized investment management, which has moved to NCB Capital Markets Limited. The reorganization strengthens stockholder value by enhancing governance and risk oversight, improving operational efficiency, unlocking synergies across the group, and delivering a superior experience for our clients. Other operating expenses rose by 5% or 1.9 billion, driven in part by higher property and technology-related costs. These included increased licenses, infrastructure expenses associated with our cloud migration activities. Strengthening our technological foundation remains critical to building consistency and resilience across the group, ensuring greater capacity, operational stability, and long-term business continuity and growth. While infrastructure-related costs increased, this was partially offset by reduced consultancy and professional fees. We also recorded higher card rebates, reflecting increased card usage by our customers, while operational losses rose due to provisions made for prior period outstanding balances. Despite these increases, overall revenue growth led to improvements in our cost-to-income ratio, which declined to 64.29% from 73.56%. The group remained focused on operational efficiencies designed to optimize our cost structure, strengthen overall productivity, and support continuous improvement in the cost-to-income ratio and other key performance metrics over time. I'll now have a look at our segments. For the 2025 financial year, 6 of our 7 business segments recorded higher revenues, and 5 of those segments delivered improved operating profits compared to the prior year. Life, Health and Pensions was the strongest performer, contributing 38.5 billion to the group's operating profits, an increase of 14.5 billion or 61%. And these numbers that I'm quoting are before tax numbers, and they also exclude corporate unallocated expenses. So that's 38.5 billion for the group's operating profit for Life, Health and Pensions. That's the contribution, an increase of 14.5 billion or 61%. The previously noted gain from the sale of the Netherlands subsidiary is included in this segment as well. Excluding the one-off, the segment continued to deliver underlying strong performance, solid performance. This segment delivered revenue growth across most reporting lines while maintaining stable operating costs. There were higher insurance service results, net interest income, net fee and commission income, and other income compared to prior year. This increase in revenue were partially offset by lower returns from investment activities. The Treasury segment, which is another segment within the group, mainly within National Commercial Bank Jamaica Limited, remained a steady and reliable contributor to the group's overall performance, ranking second highest in terms of contributor. This segment delivered operating profits of 13.7 billion, an increase of 6% or 823 million over the prior year. This segment continues to play a pivotal role in executing our pricing strategy and in strategically optimizing the balance sheet of the banking business. The improved performance was primarily driven by a 1.1 billion increase in net interest income, supported by strong liquidity position during the year that enabled greater deployment into the investment portfolio. General Insurance, another segment, delivered operating profit of 11.4 billion, an increase of 87% or 5.3 billion over the prior year. This strong performance was driven primarily by improved net insurance service revenues, which grew by 4.1 billion or 56% together with lower insurance finance expenses and improved gains from investment activities. Wealth asset management and investment banking, another segment, reported operating profit of $7 billion, a substantial increase of 259%, or $5 billion. The strong performance was driven primarily by higher net interest income, unrealized and realized gains on investments, and improved fee and commission income resulting from increased investment banking activities during the year. Net interest income rose within this segment by $2 billion, or 40%, reflecting strengthened liquidity and more favorable market conditions. Gains from investment activities increased by $2 billion, or 162%, as market opportunities improved during the year. Additionally, net fee and commission income grew by 38%, or $1.2 billion, supported by heightened client engagement and stronger demand for advisory and investment banking services. Corporate and commercial banking, another segment, reporting operating profit of $5 billion. And that's a decrease of around 4%, $228 million. This performance was mainly impacted by a $1.2 billion reduction in net interest income due to a reduction in the overall loan portfolio during the year, despite an increase in our net margins. This was partially offset by improved net fee and commission income. The reduced loan portfolio resulted from our strategic decision to reposition and strengthen asset quality, as well as improve returns, which led to fewer loan originations compared to the prior year. We're still focused on converting our robust deal pipeline and pursuing strategic growth opportunities. Credit impairment losses in this segment declined in 2025, as the prior year had included a provision for a fairly large exposure, and that's the prior year, 2024. The payment services segment delivered a solid performance, nearly doubling its operating profit to $4.7 billion, up from $2.4 billion in the prior year, an increase of 96%, or $2.3 billion. This segment continues to benefit from strong digital adoption and sustained transaction growth, which supported revenue expansion across all major income lines. Net interest income in this segment also rose by $1.7 billion, or 28%, while net fee and commission income increased by $1 billion, or 10%. Both card issuing and card acquiring experienced higher transaction volumes, reflecting increased engagement from customers and merchants and wider adoption of cards and electronic payment channels. This strong performance was partially offset by higher operating expenses, driven mainly by increased card reward costs tied to greater usage and promotional initiatives, together with higher technology support costs. And just to mention one other thing on payment services, during the year, merchant transactions exceeded or approximately $950 billion. Huge. You'll head to $1 billion shortly. A trillion, sorry. A trillion. Yes. The consumer and SME banking segment reported operating profit of $1.6 billion, a decline from $1.8 billion recorded in the prior year. This segment continues to deliver growth in net interest income, net fee and commission income. Net interest income increased by $2.2 billion, or 7%, driven by improved yields and lower funding costs. And a significant portion of the customer deposits is within this segment. This was further supported by loan growth in targeted portfolios, particularly high-yielding digital loans, consumer mortgages, and SME financing. Net fee and commission income within this segment grew by $310 million, or 5%, reflecting expanded digital lending activities, higher credit-related fees from loans disbursed during the year. Our simple and convenient digital offerings continue to attract a broader customer base and enhance our ability to generate fee income through digital channels. The improved revenues were partially offset by higher credit impairment losses and operating expenses. I'll move to the balance sheet, or what we call now the statement of financial position. Total assets, September 2025, was $2.41 trillion, an increase of $90 billion, or 4%, This growth was primarily in the investment securities portfolio. Investment securities, including pledge assets and reverse repurchase agreements, total 1.27 trillion, an increase of 8% or 93.2 billion, which reflects the deployment of available liquidity into high-quality instruments as well as improving market valuations. Loans and advances net of credit impairment losses totaled 618.3 billion, representing a decline of 1% or 7.9 billion compared to the prior year. Despite the modest decline, and we'll call 1% a modest decline, right? The loan portfolio remains robust and continues to be the group's second largest earning asset, accounting for 26% of total assets. Customer deposits rose by 3% or 25.4 billion to 809.4 billion. First time we're breaking the 800 billion limit. We're there now, and we continue to trend beyond this 809 by the time we get to December. This growth underscores the stability of the funding base, reflects the continued confidence of our customers in the group's financial strength and service offerings, reflecting 36.1 billion increase. Deposits remain our largest and most stable source of funding. The increase in other borrowed funds was a result of the holding company, NCBFG, successfully raising funds through the 144A Regulation S of the U.S. Securities Act as part of longer-term funding strategy of the group. This debt raise has diversified the funding base outside the region, increased the average debt portfolio duration. It has lengthened the maturity profile within the group in terms of borrowing, and is to be used to repay existing debt. We have already started repaying debt. We would have repaid debt as at the end of September 2025, further repayment in December 2025 quarter, and further repayment in this current quarter, this March 2026 quarter that we're in now. Insurance contract liabilities stood at 554.3 billion, reflecting a 2% or 10.6 billion increase over the prior year. This reflects the growth of our insurance business across the region. Stockholders' equity attributable to stockholders of the parent increased to 199.1 billion, a 16% or 26.8% increase, and that's mainly through growth in retained earnings profitability during the year. Capital, all our regulated entities, and we have many regulated entities across the region, they all exceeded their capital and the regulated limits for capital and liquidity across all our subsidiaries here in Jamaica and all over the Caribbean, all over the region, including the Netherlands as well. During the year, NCBFG declared dividends to shareholders totaling $1.50 in relation to the financial year ended September 2025. We released our first quarter for this financial year recently, and I will now touch on some highlights from the December 2025 financials. They were released yesterday. The group reported consolidated net profit of 5.1 billion, and that's 1% or 59 million lower than the prior quarter, which is December 2024, or the comparative quarter. The consolidated net profit attributable to stockholders of the company was 2.5 billion, 93 million, or 4% below the prior year's result. The current quarter includes the impact of Hurricane Melissa, which affected the quarter's performance through higher insurance claims, increased expected credit losses, lower fee income, and elevated operating costs. Unrealized fair value losses recorded and also unrealized fair value losses recorded through our equity portfolio, primarily within the insurance segment. Operating income for the quarter totaled 33.5 billion, reflecting a 5% or 1.6 billion decrease from the prior year. Net revenues from banking and investment activities of 25.4 billion declined by 25% or 8.5 billion. This was largely due to the 8.7 billion or 139% reduction in gain from foreign currency and investment activities, and this is mainly on the investment activities side. Gains on the FX side, on trading on the FX sides, continue to be strong. So it's mainly the investment activities that would have recorded losses during the quarter. This resulted in the group reporting net losses in this specific line item, which is gain on FX and investment securities. Net fee and commission income declined by 594 million or 8% when compared to the prior year. This performance was primarily influenced by two key factors: customer relief through financial solutions provided as a result of the passage of Hurricane Melissa, which reduced fee income during the quarter. We also did refinements to the credit adjudication process for certain digital loan products as part of our strategy to enhance asset quality. This resulted in a moderation in loan originations during the quarter, which in turn impact fees generated from credit. Insurance service result was 9.4 billion, up from 7.5 billion in the prior year. While insurance revenues remain relatively stable compared to the prior year, insurance service expenses increased, driven primarily by property and casualty, or through the property and casualty segment. The expenses, and in this segment is where we would have booked the claims for Hurricane Melissa. The expenses included gross claims payouts for Hurricane Melissa totaling US $161 million, and that's the gross claims. Net expenses from reinsurance contracts were lower, as reinsurance recoveries related to Hurricane Melissa was 148 million. So gross claims 161 million, we were able to recover 148 million US dollars. As a result, the net costs associated with Hurricane Melissa claims amounted to US $12.5 million. Net insurance finance expenses declined by 5.1 billion or 81% compared with the prior, driven mainly by movements within the life, health, and pension segment. As previously noted, unrealized fair value losses and equities also affected unit-linked products, while combined insurance coverage with an investment component. So those are the products, insurance products with an investment component. There would have been losses there. The reduction in insurance finance expenses reflected changes in the fair value of underlying assets, of contracts, and consequently the value of policyholders' underlying funds. This was partially offset by favorable movements related to the effects of changes in interest rates and financial assumptions and interest accreted. Operating expenses declined by 1.5 billion, 5% to 26.2 billion. The reduction was primarily due to lower operational losses compared to the prior. The quarter also included annual asset tax charges, Chair, of 2.7 billion for our regulated Jamaican non-insurance entities, representing 2% increase. And Chair, it will be a little higher than 2.7 by the end of March, as the insurance companies will pay their portion of the asset tax as well. Their financial year is December 2025, and the asset tax is paid after that financial year. So that will be booked in the second quarter. So it will be a little more than 2.7 billion. In relation to the key performance metrics, annualized return on assets was 0.84% compared to 0.89% for the prior year, while annualized return on equity at 5.11% compared to 6.17%. However, the cost-to-income ratio improved to 72.54% from 73.57% in the prior year. I'll quickly look at the segments as well for Q1 for December 2025. Life, health, and pensions contributed 7.2 billion to the group's operating profit, declining by 782 million or 10% from the prior year. Despite recording losses on investment activities due to equity prices, there were positive movements in insurance service results and insurance finance expenses. The Treasury and Correspondent Banking segment reported operating profit of $2.9 billion, an 8% or $238 million decrease from the prior. This was mainly due to a decline in net interest income, which was partially offset by higher gains from foreign currency and investment activities. Wealth, asset management, investment banking reported $1.8 billion in profits, an increase of 35% or $456 million. The main drivers of the increase were increased net fee and commission income and higher dividend income. The payments segment delivered operating profit of $1.7 billion, continued to perform really well, doubling the prior year's result with an increase of $1 billion or 164%. This performance was driven by a strong growth in both net interest income and fee and commission income, which boosted the segment's result in the current financial year. General Insurance recorded operating profit of $1.3 billion, or 39%, or $583 million decline compared to the prior. This is where Hurricane Melissa would have hit the most. This was driven primarily by a $1.5 billion reduction in insurance service results due to net claims arising from Hurricane Melissa, as well as losses on the investment activities. Corporate and Commercial Banking reported operating profit of $1.1 billion, representing a $265 million or 20% decline from the prior year. Net fee and commission income decreased by $207 million, and expected credit losses increased by $90 million. Consumer and SME reported an operating loss of $491 million compared to a $231 million loss in the comparative prior. The segment had reduced fee and commission income due to changes to the credit adjudication process for digital loans, together with reduced fees due to Hurricane Melissa. There were also increased expected credit losses due to the impact of the hurricane, and most of these losses were booked in this segment in terms of expected credit losses. These adverse variances partially offset by higher net interest income. To quickly look at the balance sheet continues to grow in terms of total assets, up to $2.42 trillion, increase of 6% or $129.4 billion compared to December 2024, mainly due to increase in investment securities. Investment securities total $1.26 trillion, an increase of 11% or $121.8 billion. Loans and advances net of impairment losses total $608.4 billion, decreasing by 1% or $8 billion. Customer deposits continue to grow, $809 billion at the end of September, $836.9 billion at the end of December 2025. That's a 7% increase from last year, this time over the period. Equity attributable to stockholders of the company at the end of December 2025 reflected a position of $197.5 billion, and that's a 17% increase over the prior year, primarily due to growth in retained earnings with increased fair value and insurance finance reserves. All regulated entities exceeded their regulatory minimums for capital and liquidity. Also, the Board of Directors at its meeting on February 12, 2026, approved an interim dividend of 50 cents per ordinary stock unit. The dividend is payable on March 16, 2026, to stockholders on record as at March 2nd, 2026. I want to express my sincere appreciation The Board of Directors at the meeting held on February 12, 2026, approved an interim dividend of 50 cents. And with that, I want to express my sincere appreciation to our shareholders, customers, employees, partners, all our partners, for the confidence in the group. There is strength in consistency, and we focus on becoming the financial partner of choice. Thank you.
Thank you very much, Malcolm. I'll now ask that the Group Chief Executive Officer, Mr. Robert Almeida, address the meeting. Robert?
Thank you, Chairman. Good morning, everyone. So today represents an important milestone, an important inflection point, actually, for NCB Financial Group. We are closing one chapter with clarity and discipline, and stepping confidently into the next. When we reported our results for the year ended September 30th, 2025, I said clearly that the turnaround which began in late 2023 was nearing completion. We also signaled that fiscal 2026 would be a transition year, a bridge between turnaround and sustainable growth. In simple terms, 2026, the year we're in right now, is about two things. Completing the turnaround. We have to stay focused. We have to keep our execution, keep our eye on the ball. And positioning the group for the next phase of durable, disciplined growth. But before you can move forward with confidence, you must first close the past with honesty. So in late 2023, the business was under strain and required decisive corrective action. The signs were clear. Our debt was rising while our equity was falling. And second, a significant portion of our borrowings was actually maturing within a very short time frame. So we were approaching what was called a debt cliff. At the time, I described our task as trying to renovate and retool a 747 while it was still in the air. And we did so against the backdrop of hurricanes, geopolitical disruption, and global economic uncertainty. 2 years later, I can say with confidence that NCB Financial Group closed fiscal year 2025 in one of the strongest positions in its history. From our boards and executive leadership to our 5,000 plus team members supported by resilient infrastructure and strong governance, this organization is better positioned for the future. In an era where facts matter, I'll just quote Angus, he says, "Don't trust me, let's just look at the facts." In an era where facts matter, so let's look at some of them. Over the past 2 years, our consolidated net profit increased from $7.7 billion in 2023 to $36.9 billion in 2025, the highest in our history. Stockholders' equity rose by nearly 50%, from $171 billion to $254 billion, also a record. Equity attributable to stockholders of the parent, the people in the room, reached $199 billion, another milestone. Return on equity rebounded to 12.46%, moving us closer to our target range of 15% to 20%, which would make us competitive not just regionally, but globally. Our efficiency ratio improved from 87% to 64%, approaching our best performance of the past decade, but not quite where we want to be. Net debt declined materially, with the gearing ratio improving from 79% to just over 50%, which is supported by a longer-dated, more diversified funding profile, as Malcolm alluded to earlier. The book value per stock unit increased to $82.54, again a 10-year high. Dividends, which typically lag performance, have returned to the lower end of our historical norms and are continuing to normalize. Ladies and gentlemen, as you know, dividends follow performance. So very clear to say dividends follow performance, and our trajectory is clear. After prudently suspending distributions during the balance sheet reset in 2022 and 2023, we reinstated dividends in 2024 and continued in 2025, and currently running at an annualized rate of $2 per share per year. That places us back within our historical range and moving back towards pre-COVID levels of approximately $2.70 per share. This reflects our stronger earnings, improved capital stability, and disciplined cash flow management. We remain committed to returning value to our shareholders in a way that is sustainable, prudent, and supportive of long-term growth. These are not abstract statistics. They reflect a business that has gained financial discipline, resilience, and strategic focus. So where does that leave us today? Despite the unprecedented impact of Hurricane Melissa, our first quarter performance, which you just heard about, has been broadly in line with our expectations. As debt continues to decline and dividends from our operating subsidiaries increases, we expect the free cash flow available, it's kind of like the Jaws, Ian Chinapoo says, so that the interest from the debt to go down, the earnings to keep going up, therefore increasing the free cash flow to NCB Financial Group, and therefore that would also create more free cash flow available for further debt reduction and for dividend increases going forward. This is what transition looks like: less firefighting, more forward momentum. Across the group, I'm supported by a strong executive team and a dynamic assembly of talented employees. And at this point, I'm going to invite the CEOs of our operating subsidiaries to share some perspectives from their respective businesses. And so we'll start with Cherie Martin, who's here in person, and then we'll have Ian Chinapoo and Ian Trurin, in whichever order, tell you about Clarion and Guardian. So Cherie.
Thank you, Rob. Good morning, everyone. Chairman, Group CEO Rob Almeida, directors, shareholders, regulators, stakeholders, and all employees within NCB. Good morning again. In keeping with our parent NCBFG's deepening philosophy, the bank's responsibility is clear. It's articulated in EGC. I am describing it as clear financial sustainable strength, deepening our customer trust, reinforcing governance discipline, and executing with consistency. So my first priority is financial soundness and risk management. Over the past year, we have deepened our focus on capital protection, liquidity resilience, and asset quality oversight. Credit discipline has been sharpened. Risk governance structures have been strengthened across business lines, control functions, and technology delivery. In a global environment that remains uncertain and increasingly complex, prudence remains central to how we operate, because a sound bank is the foundation of every promise we make to our customers. My second priority is placing the customer at the center of everything we do. We are investing in a transformed customer experience, one that is faster, more intuitive, and certainly more responsive. We are listening more closely to our customers through enhanced feedback channels and using those insights to redesign journeys across branches, digital platforms, and other contact channels. Our commitment is to make every interaction with NCB simpler, more seamless, and certainly more personal. Customer satisfaction is not an aspiration, it is actually a performance metric that we hold ourselves accountable to. My third priority is advancing operational discipline and structural efficiency. Through projects and related initiatives, we are embedding cost transparency, process simplification, and data-driven prioritization across the organization that I'm honored to lead with a fantastic team of leaders. Critically, we are channeling our efficiency gains back into the areas that matter most to our customers: faster service turnaround, improved digital capabilities, and more accessible products. Sustainable growth depends on a platform that is lean, controlled, and well-governed, and that delivers real value to the people we serve. Fourthly, I'm strengthening the execution framework of the bank. That includes reinforcing accountability and execution excellence at all levels, clarifying performance standards, and ensuring alignment between risk appetite, customer outcomes, and financial returns. We are embedding customer impact into how we measure performance because sustainable performance must be repeatable, controlled, and ultimately felt by the customers we serve. At the same time, we're continuing to modernize our sales and service model, headed by my EVP, Perrin Gale. Growth for us is not pursued at the expense of discipline. It is pursued within defined risk parameters, supported by improved analytics, stronger customer engagement, and consistent service delivery. We are equipping our teams with better tools and training so that every customer touchpoint reflects the standard of care and professionalism that NCB stands for. So why is the future bright for NCB Jamaica Limited? Because the bank is operating from a position of strengthened capital and liquidity. Because governance has been reinforced, not relaxed. Because we're building a customer experience that earns loyalty, not just transactions. Because execution discipline has improved across risk, operations, and leadership. And because the group's declining interest costs and improved subsidiary earnings create a more stable financial ecosystem in which the bank operates. So my team at NCBJ is not focused on acceleration without control. We're focused on sustainable growth, built on strong fundamentals, and a relentless commitment to our customers. That is how we protect depositors. That is how we serve customers responsibly. That is how we earn trust every day in every interaction. And that is how we create enduring value for you, our shareholders. Thank you.
Ian, good to go.
Rich
Ian. Sorry. This is my life. Ian Chinaplu, please proceed.
All right. So good morning, all. Good morning, Chairman, and all the shareholders in the room, and all the directors as well. And let me recognize the President of Guardian Life Limited, Megan Miller-Brown, and the President of Guardian General Insurance Jamaica Limited, Ms. Karen Borising. So at GHL, we continue to strengthen and evolve our core business, as well as pursue growth strategies that are clearly aligned to our desired future state. We recognize that as a long-term value protector and creator, we must have an unassailable balance sheet, reinsurance and other risk mitigation infrastructure, which you actually just saw live and direct in Malcolm's presentation with the Hurricane Melissa impact. And we must also ensure that we are growth engines for you, for profitability and capital protection for our customers. In fact, our shareholders' equity, our book value, is now over US $925 million, up 38% in the last 12 months. And NCBFG shareholders represent 61.7% of that. We have aligned around our North Star of achieving a globally competitive return on equity, and we have been embedding an owner's mindset culture among our talented team members, aligned to achieving the fundamental drivers of our global standards for efficiency, governance, and customer experience, as you would have heard Sherry say as well. In this vein, please allow me to highlight two key areas of investment and dedication in financial year 2025 that are critical positions to better deliver on our promises to our shareholders, which would advance all of our EGC goals. Those two are capital management and product development. So as you heard from Malcolm, we have rebalanced some of our core operating assets via divestments and acquisitions of entities and portfolio. The most notable action in 2025 would have been the divestment of 100% of the shares of our Netherlands brokerage. And as Malcolm said, that would have generated over 15 billion Jamaican dollars in profit. And that transaction also, those proceeds, along with this other non-core asset sales and core operational growth, has contributed to the funding of our capital warehouse. This capital warehouse is a key strategic priority and a home for our business continuity reserves and our funds for strategic investments. This fund is now in excess of 1 billion TT dollars. So these reserves, business continuity reserves, are invested in high quality securities designed to provide capital adequacy protection for all our regulated subsidiaries, and our strategic investment war chest supports board approved growth investments in new business opportunities and in capital assets to improve our core operational and service efficiency. In 2025 as well, we commenced acquisition activity with the purchase of the pension fund management portfolio of the NCB Insurance Agency and Fund Management Limited. As you know, the Caribbean pension market is valued at over Jamaican $2.4 trillion. That's almost 15 billion US dollars in assets under management, with structural growth via aging regional populations. So this positions us to a great opportunity to become a regional pensions player, where we are already the largest pension provider, administration provider in the Dutch Caribbean, and a major player in Trinidad and Tobago. We are now close to 25% of the market in Jamaica. We've also been deleveraging, again aligned to what Malcolm shared. We have paid off in 2025 Jamaican $7.1 billion in debt, resulting in our gearing ratio declining from 86% to 56%. That's 30 percentage points. And if you zoom out a little bit, over 3 years, we've come down by almost 50%. So that further improves the jaws, as I like to say, because it de-risks our balance sheet, strengthens our financial flexibility, and allows for greater free cash flows, which of course will redound in greater dividends to shareholders. And as we talk about dividends, critical to capital management, we have now instituted in 2025 quarterly dividend payments. So we've started that and we're going to continue that. And in each quarter, we've continued to focus on increasing our dividend payout. So in the last 12 months, we've actually paid out per share $23.11 Jamaican. This resulted in our dividend payout ratio increasing by 40% in 12 months, which is 8 percentage points from a 21% dividend payout to a 29% dividend payout. And we expect that there's room to sustainably grow these dividend payouts in the coming quarters, which is aligned to what our group CEO shared. We've continued to strengthen our reinsurance portfolio, and I think Malcolm shared very well with you. Gross claims for Hurricane Melissa, 161 million US, and from that we recovered 148 million from our reinsurance treaties. So our group continues to provide that regardless of the disaster, we will always be there for our policyholders because of the resilience we've built. The last point I'd like to mention is our innovative product factory, which is about developing new and fundamentally innovative thinking to adapt to the needs of the Caribbean customer and to be a revenue growth engine with new products, most recently in cyber, electric vehicles, and also soon to come our parametric product. And this would allow us to be much more creative and responsive in our product development. We are also developing and accelerating our bank assurance offerings and our specialized marine coverage. This is all led by improved data-driven insights from our internal big data platforms. We're not as old as NCBFG, but we are 179 years old, so 10 years younger. So maybe one less gray hair, Chairman Mike. We have also improved our customer experience by offering more opportunities for digital-first journeys and faster claim settlements via straight-through processing in the Dutch Caribbean and via our implementation and which is in progress of our new Oracle Insurance Policy Administration platform. So the future is bright, and hopefully this will result in much greater free cash flow and higher dividends for you, the NCBFG shareholder. Thank you.
Lastly, Ian Truran. There we go. Thanks, there, Ian Truran.
Thank you very much, Rob. Last but not least, let's start with that. Good morning, Chairman, directors, shareholders, and colleagues. Thank you very much for the opportunity to be able to present this morning. My goal had been to be there in person, and I certainly look forward to being there for the next opportunity. I'm going to start first with a 5-year performance trajectory, which I think is important because it sets the stage for the future. And I'm pleased to report that over the past 5 years, Clarion has reported a net income of a 19% compounded annual growth rate. And I remember chatting with the prior MD and current managing director and group CEO with regards to what's achievable versus what's unrealistic. And we set targets at a 20% compounded annual growth rate, that which would be a top quartile performing organization. We fell slightly short of 20% at 19, but I'm extremely, extremely proud of what we achieved. During that tenure, 5 years, we've also experienced a 61% reduction in our non-performing loans, down to a year-end number of 4.37%, still not low enough, but a significant improvement in credit quality from where it was. And lastly, with regards to capital, and which represents financial stability as well as the opportunity for growth, we've experienced a 52% increase in our capital ratio, and at year-end standing at a very strong 32.48% capital requirement. So those are pleasing results. That sets the stage for the past and also sets the stage for the future. When I look at 2026, we certainly are experiencing headwinds in the form of the interest rate environment that we are operating in. But with that said, I'm pleased to say the balance sheet is sustained insofar as its growth characteristics. It represents an extremely strong credit discipline, and we are focused on continued balance sheet growth both here in Bermuda and looking forward to opportunities in Cayman and the Pan-Caribbean region, generally speaking. With a capital ratio at the end of the financial quarter at 30.49%, it stands us in very good stead to be able to grow both on balance sheet and off balance sheet opportunities organically and acquisitively. The wealth management business has continued to perform extremely well. And I'm pleased to say we have a record balance of assets under management and under administration, currently standing at north of $1.5 billion US. From a financial performance, it continues to experience not only year-on-year growth, but above budget expectations, and we firmly believe that that trajectory will continue. Finally, with regards to financial performance, I'm pleased to indicate that we did pay out a dividend and declare a dividend from Clarion Group Limited to the shareholders this year of a 50% payout ratio. So that's 3 years of dividend payouts, increasing from what was a 33% payout ratio to now a 50% payout ratio, the equivalent of 1 billion Jamaican dollars. Insofar as ongoing focus, there are 4 primary focuses that I have. 1, maintain the foundation. Our governance and risk management practices have put us in a particularly good place such that we're able to focus not only on resilience for the sake of resilience and compliance, but resilience for the sake of growth as well, using it not as a value inhibitor, but as a value enabler. With that said, looking at both on-balance sheet and off-balance sheet growth, we're looking at our retail segment, commercial segment, and our wealth segment with which to grow into. The pipeline does look strong, both here in Bermuda and through referral partners within the group, as well as external referral partners. We're seeing opportunities presented to us that fall squarely within our risk appetite and will be contributory towards our net interest margins and overall revenues. Insofar as our clients, we look to improve and enhance and simplify the client experience. We're going through a process of rationalizing our products and our processes. I indicated to the group board yesterday, and I'm pleased to report it here as well, that we've taken effectively, one would historically be able to suggest that 80-20 rule, 80% of things produce 20% of value. In this particular case, I'm pleased to say that through an analysis of our products, we've actually realized that we have 90% of value coming from 20% of our products. And we're able to significantly rationalize our product base as a result, which will improve not only the client experience, but also improve the efficiency and operating margins of the institution. With that, we're also implementing automation, self-service, and reduced friction through our processes. We're doing end-to-end journey management across all of our various different segments. And lastly, looking at our efficiency through use of our technology platforms and our managed services model to drive efficiency with scale. So we're well positioned to not only meet the service needs here in Bermuda, but into markets with which we hope to grow, as well as cost avoidance. With our current cloud-based platform, we're able to significantly avoid some of the what would have been historical traditional expenses associated with improved resilience. And I can confidently say that those costs will be avoided on a going forward basis, and again, allow us to scale. So thank you very much for the opportunity, and I look forward to being there in person next time. Thank you, Rob.
Thank you, Cherie, Ian, and Ian. I hope you appreciated that. I know it took a little extra time, but I really wanted you to get a feel for your business is stewarded by, and that's just a fraction of the leadership team that actually stewards your businesses. And the most important goal for me was to give you a little bit of a sense of confidence that your business is in good hands. Before I close, I'd like to remind us of something very fundamental. So we went through a lot of numbers, we went through a lot of business plans, things like that. There's discipline, there's structure, there's just continuous discipline. But it's really important to remember that NCB Financial Group is more than a financial institution. We exist to stand with our customers, with our communities, and especially in moments of disruption. Our response in the aftermath of Hurricane Melissa, which significantly impacted infrastructure across the Caribbean, particularly in Western Jamaica, is a recent example. In that moment, our responsibility was continuity. We maintained service availability, we reopened branches quickly, and we mobilized meaningful support for the customers and the communities. That response was not accidental nor incidental. It was the product of preparation. It was the product of disciplined risk management and sustained investment in resilience. As I conclude, I invite you to watch a short video that reflects how we stand with our customers and communities, demonstrating in very practical and tangible terms our commitment to resilience, nation building, and long-term wealth creation. The turnaround strengthened our balance sheet, the transition strengthens our future, and sustainable growth will be built on trust, discipline, and purpose. To all of our stakeholders, thank you for your confidence, thank you for your partnership, and thank you for your continued support as we move into this next chapter together. And with that, I'll just please watch the next video.
NCB has been a tremendous partner with Jamaica Broilers for many years. One of the first banks that Jamaica Broilers 68 years ago opened up a relationship with was NCB. That was before my time, and the relationship with the two companies has just grown. NCB understands us. They understand our culture. They understand our priorities. They understand our risks. And they understand our abilities. Recently, with the challenges that we face, they've become an intimate partner. They're a bank that goes beyond just relationship banking. They care about your company. They understand the needs of it. They're culturally attuned to us in Jamaica. They're an indigenous bank that brings tremendous value to your organization, and I can testify to that because we've worked with them through these challenging times in a very, very intimate way, and they have advised and guided us, and it's with a tremendous heart of gratitude that I want to just share my appreciation of this relationship.
It was 2019 and I had been with my health insurance provider for just over 3 years. Around that time, I was diagnosed with lupus and had started receiving treatment. Not long after, I began experiencing a persistent pain in my left leg. No matter how many x-rays I did, nothing showed up. Eventually, I was referred to an orthopedic surgeon who recommended an MRI. I remember thinking, thank God I have health insurance, because MRIs aren't cheap. After the MRI results came in, I got the news. I needed a bilateral hip replacement. Sounds expensive, right? That's because it is. Once the total cost was confirmed, I reached out to my agent at that time, Gary, and I was relieved when he told me my insurance would cover a significant portion, 70% of the cost, and I would only need to cover the remaining 30% as a copay. Gary made this entire process incredibly smooth. I simply emailed him the necessary information, and within a week he got back to me with a clear breakdown of what my insurance covered and what I needed to pay. That level of support brought such relief, knowing that I didn't need to come up with all of the money out of pocket. It gave me and my family a sense of comfort. The surgery was a success, and Guardian Life didn't stop there. They covered my prescriptions, emergency recovery care, and even post-operative physiotherapy. To this day, I still have health insurance. No hiccups, no cancellations because I claim too much. No issues due to my diagnosis. My insurance works for me. Today, I proudly endorse Guardian Life and my agent Gary for helping me through the most difficult time of my life, making it as easy as possible. Not all superheroes wear capes. Some sell protection through insurance. And because of that experience, I made the decision to become an agent myself. I want everyone to feel that sense of comfort and confidence I felt knowing that they can rely on their agent when it matters most.
I just want to thank the NCB Foundation for the good work they have been putting today. So I'm here with my voucher to get my chicken, and I'm thankful and grateful for what you have been doing.
Okay. Oh, it is still morning. Good morning again. All right, before we get on to the next items, would the driver of Suzuki Swift license plate number 7419JC, Suzuki Swift license number 7419JC, if you're in the room, please attend to your vehicle. All right, the next items of business, Chair, require the passing of various resolutions, and we come to the crowd favorite, the audited financial statements. The audited financial statements have been circulated, and I now call upon Mr. Paul Williams of PricewaterhouseCoopers to read the auditor's report.
Good morning. Thanks, Dave, for setting me up, but anyway. Independent Auditor's Report to the members of NCB Financial Group Limited. The report on the audit of the consolidated and standalone financial statement. In our opinion, the consolidated financial statement and the standalone financial statement give a true and fair view of the consolidated financial position of NCB Financial Group Limited, the company, and its subsidiaries, together the group. The standalone financial position of the company as at September 30th, 2025, and their consolidated and standalone financial performance and their consolidated and standalone cash flow for the year then ended in accordance with IFRS accounting standard and with the requirement of the Jamaican Companies Act. We have audited the group consolidated and standalone financial statement comprise the consolidated statement of financial position as of September 2025, the consolidated income statement for the year then ended, the consolidated statement of comprehensive income for the year then ended, the consolidated statement of changes in equity for the year then ended, the consolidated statement of cash flow for the year then ended, the company statement of financial position as of September 30th, 2025, the company statement of comprehensive income for the year then ended, the company statement of changes in equity for the year then ended, the company statement of cash flow for the year then ended, and the notes to the financial statement comprising material accounting policy information and other explanatory information. Basis for opinion. We have conducted our audit in accordance with International Standard on Auditing, ISAs. Our responsibilities under those standards are further described in the auditor's responsibility of the audit report of the consolidated and standalone financial statement section of our report. We believe that our audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Independence. We are independent of the group in accordance with the International Code of Ethics for the Professional Accountant, including independent standard, issued by the International Ethics Standard Board of Accountants, the IESBA Code. We have also fulfilled our other ethical responsibilities in accordance with the said code. Our audit approach. Audit scope. As part of designing our audit, we determine materiality level and assess the risks of material misstatement in a consolidated and standalone financial statement. In particular, we consider where management made subjective judgment, for example, in respect of significant accounting estimates that involve making assumptions and considering future events that are inherently uncertain. As in all our audit, we also address the risks of management override of internal controls, including, among other matters, consideration of whether there was evidence of bias that represented a risk of material misstatement due to fraud. How we tailor our group audit scope. We tailor the scope of our audit in order to perform sufficient work to enable us to provide an opinion on the consolidated financial statement as a whole, taking into account the structure of the group, the accounting processes and the controls, and the industry in which the group operates. Key audit matters. Key audit matters are those matters that, in our professional judgment, were of most significance in our audit of the consolidated and standalone financial statement of the current period. These matters were addressed in the context of our audit of the consolidated and standalone financial statement as a whole, and informing our opinion thereon. We do not provide a separate opinion on these matters. We have determined that there are no key audit matters as it pertains to the standalone financial statement in our report. The first key audit matter, valuation of insurance contract liabilities, estimation of future fulfillment cash flow for the group. See note 2, 3, 9, 49 of the financial statement of the disclose of the related accounting policies, judgment and estimates and balances. As of September 2025, insurance contract liabilities total $554 billion, or 26% of the total liabilities of the group. Insurance contract liabilities measure under the variable fee approach and the general measurement model approach, which consists of the contractual service margin, the CSM, which is a component of the carrying amount of the assets or liability of the group of insurance contract, issue representing unearned profit that the group will recognize as it provides insurance contract service in the future. It also consists of fulfillment cash flow, the FCFs, which are current estimate of future cash flow within the contract boundary of a group of contracts that the group expects to collect for premium and payout for claims, benefits, and expenses, adjusted to reflect the timing and uncertainty of those amounts. The fulfillment cash flows comprise unbiased and probability-weighted estimate of future cash flows discounted to present value to reflect the time value of money and the financial risk plus risk adjustment for non-financial risk. Measurement of the fulfillment cash flow requires management judgment in estimating the probability weighting mean of future cash flow on a present value basis, in addition to applying a risk adjustment. It also involves estimates of expected cash flow, incorporate best estimates assumptions for mortality, morbidity, longevity, expenses, and policyholders' behavior, as well as assumption for discount rate and risk adjustments. The assumptions are reviewed and updated annually by the appointed actuaries. We focus on this area due to the judgment applied by management when determining the fulfillment cash flows and the corresponding high degree of auditor judgment and effort required in evaluating the assumptions described above. How our audit addressed this key audit matter. Our approach in addressing this matter, with the assistance of our external actuarial expert, risk assurance specialists, including the following procedures, among others. We update our understanding of management end-to-end process and control supporting the determination of the fulfillment cash flow. We also tested the accuracy, the completeness of a sample of the data used in the estimated of future cash flows. We also assessed the reasonableness of management best estimates assumptions for mortality, morbidity, longevity expenses, and policyholders' behavior, that is the lapses and surrenders. We also look at economic assumptions for discount rate, the adjustment for non-financial risks, by evaluating whether management assumptions were determined in accordance with the requirement of IFRS 17. We also evaluate the group internal experience studies for appropriateness by considering published industry studies. We also look at market data, component-specific facts and circumstances. We also evaluated on a sample basis actuarial models used in management determination of the fulfillment cash flow. By assessing the appropriateness of the model product features, we also assess the appropriateness of the application best estimates assumptions. We assess the disclosure within the financial statement against the requirement of IFRS 17. The second key audit matter relates to IFRS 9 financial instrument, probabilities of default, forward-looking information, and significant increase in credit risk at the group level. See notes 2, 3, 21, and 22 of the financial statement disclosure for the related accounting policies, judgment, estimate, and balances. As at September 30, 2025, the group loan and advances total $638 billion. The group investment security measured at amortized cost and fair value through other comprehensive income total $947 billion. The resultant impairment recorded under these expected credit losses impairment model amounted to $19.6 billion for loans and advances and $1.5 billion for debt securities. In aggregate, the above exposure represent 65% of the total assets as at the reporting date. In assessing impairment, IFRS 9 prescribes a forward-looking ECL impairment model, which takes into account reasonable and supportable forward-looking information as well as probability of defaults. The probability of default represents the likelihood of a borrower defaulting its obligation over the next 12 months or over the remaining lifetime of the obligation. The 12-month and the lifetime probabilities of default are determined differently for loans and investments. For investments, securities, which include debt securities, comprising sovereign and corporate security, The probability of default are developed by reference to external data collated by Standard & Poor with adjustment for industry and country-specific risks where appropriate. For loans and advances, management develop probability of default based on the group's specific historical default rates for each industry classification. In performing historical analysis, management identify economic variables impacting credit risks on the e-sale for each portfolio. The estimation and application of forward-looking information require significant judgment. Stage 1 and Stage 2 credit losses allowances are modeled based on macro variable or changes in macro variable, which most closely correlate with credit losses in the event of the portfolio. Each macro scenario used in the e-sale calculation incorporates forecasts of the relevant macro variables. In the event of a significant increase in credit risk, an allowance or a provision is required for the e-sale, resulting from all possible default events over the expected life of the financial instrument. The consideration of days past due, as well as adverse changes in the borrower's credit rating, industry, or economic environment are factors considered in determining whether there have been a significant increase in credit risk. The estimation of e-sale in Stage 1 and Stage 2 is a discounted probability weighted estimate that considers a minimum of 3 future macro scenarios. The base case scenario is derived from macro forecasts, which are publicly available. Upside and downside scenario are also set relative to the base case scenario and adjusted for reasonable possible alternative macro conditions. We focus on this area due to the complexity of the technique used in determining the probability of default and the number of significant judgments made by management regarding the significant increase in credit risk and possible future economic scenario as it pertains to debt security and loan and advances. How our audit addressed this key audit matter. Our approach in addressing this matter, with the assistance of our evaluation specialist, involved the following procedures, among others. We update our understanding of management e-sales model, including any changes to source data and assumptions. We also test for completeness of all the loans and advances and debt securities to determine whether all items are included in the e-sale model by agreeing the model to detailed loan and securities listing. We also evaluated the reasonableness of management judgment pertaining to the probability of default, the significant increase in credit risk, and forward-looking information, including macro factors impacting the weighting of the scenarios as follows. For debt security, the probability of default, we tested the critical data using the e-sale model, such as maturity date, amortized costs, accrued interest, credit rating, and interest rate by tracing back to relevant source documents. We also agreed credit rating and historical default rate used to calculate the probability of default on a sample basis to external sources such as external rating agencies. With respect to significant increase in credit risk, we tested on a sample basis the accuracy of the initial credit risk, the credit risk of the reporting date using rating agencies' definition of investment grade, and evaluate the appropriateness of group classification of debt security as Stage 2. We also perform an independent qualitative assessment for a sample of borrowers to determine whether there was any adverse public information affecting the criteria used to perform the staging. For loan and advances with respect to the probability of default, we tested the critical data fields used in the e-sale model for the PD determination, such as default rate, effective interest rate, the write-off data, and the loan type by tracing data back to source documents. We also reperformed the calculation of days past due, a key data input to the probability of default parameter in the group banking system on a sample basis. With respect to significant increase in credit risk, we evaluated on a sample basis the staging of loans and advances and compare our results to those identified and classified by management. For forward-looking information for debt securities and loan and advances, we assess the reasonableness of the group methodology for determining economic scenarios, considering industry and component specific facts and circumstances within which each of the jurisdiction in which the group operates. We also evaluated the reasonableness of the increase in the weighting used for the worst case scenarios by agreeing the forward-looking economic information to external sources published or pronounced by reputable third parties. We sensitize the probability of weighting used also in the ECL calculation. The third key audit matter relates to the valuation of unquoted corporate debt and government securities classified as fair value through P&L and through other comprehensive income for the group. See Note 3, Note 50 to the financial statement for disclosure of related accounting policies, judgment, estimates, and balances. As of September 30, 2025, unquoted corporate debt and government security classified as investment security as fair value through P&L or fair value through other comprehensive income together accounted for 37 billion or 2% of total assets of the group. These securities are classified and disclosed as level 3 within the fair value hierarchy as one or more of the significant inputs is based on unobservable market data. For unquoted corporate debt and government security, management used valuation techniques which utilize the application of a market yield curve adjusted for by a risk premium to discount the contractual cash flow for the instrument. We focus in this area as the yield curve is an unobservable input requiring management judgment and estimation, which is subject to high estimation of uncertainty. How we address this key audit risk? Our approach in addressing the matter within the assistance of our internal valuation expert involves the following procedures, among others. We update our understanding of management approach to performing fair value assessment. This includes updating our understanding of the process by which management's key assumptions and methodology were developed and assessing their appropriateness. We also tested the source data input using the valuation model by performing confirmation procedures on a sample basis and agreeing the issuance date, the maturity date, the coupon rate, the risk premium at issuance at the source of documentation. We also developed an independent territory-specific yield curve using industry data and experience and compared to management yield curve. We tested on a sample basis the contractual cash flow of the underlying securities by comparing to source documentation and evaluating any variation. The final key audit matter deals with goodwill impairment for the group. See Note 228 to the financial statement for disclosure of related accounting policies, judgment, estimation, and balances. The total carrying value of goodwill is $20 billion, or 1% of the total asset as of September 30th, 2025. In accordance with IAS 36, impairment of assets, management perform an annual goodwill assessment to determine whether the carrying value exceeds the recoverable amount of the cash generating unit to which the goodwill is allocated and is therefore impaired at the reporting date. Goodwill relating to the recoverable amount of a CGU is calculated as the higher of the value in use and the fair value less cost of disposal. Management determines the recoverable amount by reference to value in use, which is based on discounted cash flow projection, over which management makes significant judgment on the key inputs. As a result of the assessment, management determined that there was no impairment as of September 30, 2025. We focus on this area as the goodwill impairment assessments require significant management judgment, and estimation is sensitive to change in key assumptions due to potential impact of the increased volatility of prices in various markets and those key assumptions. The key assumptions were assessed by management as being the revenue growth rate, the terminal growth rate, insurance service expenses, and the discount rate. Our audit addressed this key audit matter by we update our understanding of management approach to performing their annual impairment assessment. This includes the process by which management key assumptions and methodologies were developed and assessing their appropriateness. We also compare previous forecasts to actual results to assess the performance of the business and the extent to which reliance could be placed on management ability to forecast. We also assess the 4-year forecast using the valuation model was consistent with the board-approved business plan and that the key assumptions were subject to oversight from the board of directors. We also evaluated the growth rate and the discount rate against valuation of similar companies. We also compared the key assumptions, the revenue growth rate, the terminal growth rate, the insurance service expense, and the discount rate to externally derived benchmark data. We also test the calculation for mathematical accuracy and assess the sensitivity of the calculation by varying the key assumption and adjustment within the cash forecast. Other information. Management is responsible for other information. The other information comprises the annual report, but does not include the consolidated and standalone financial statement and our audit report thereon, which is expected to be made available to us after the date of this audit report. Our opinion on the consolidated and standalone financial statement does not cover other information, and we will not express any form of assurance conclusion thereon. In connection with our audit of the consolidated and standalone financial statement, our responsibility is to read the other information, identify above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the consolidated and standalone financial statement, or our knowledge obtained in the audit, or otherwise appear to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the consolidated and standalone financial statement. Management is responsible for the preparation of the consolidated and standalone financial statement that give a true and fair view in accordance with IFRS accounting standard and with the requirement of the Jamaican Companies Act, and for such internal control as management determine is necessary to enable the preparation of the consolidated and standalone financial statement that are free from material misstatement, whether due to fraud or error. In preparing the consolidated and standalone financial statement, management is responsible for assessing the group and the company's ability to continue as a going concern, disclosing as applicable matters relating to going concern, using the going concern basis of accounting unless management either intend to liquidate the group or the company or to cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group and the company's reporting process. Auditor's responsibility for the audit of the consolidated and standalone financial statement. Our objectives are to obtain reasonable assurance about whether the consolidated and standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an audit report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ICAs will always detect material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate they could reasonably be expected to influence the economic decision of users taken on the basis of those consolidated or standalone financial statements. As part of an audit in accordance with ISA, we exercise professional judgment and maintain professional skepticism throughout the audit. We also identify and assess the risks of material misstatement to the consolidated and standalone financial statement, whether due to fraud or error, design and perform audit procedures responsible to those risks, and obtain audit evidence that is sufficient and appropriate to provide the basis for our opinion. The risk of not detecting a material misstatement resulting from fraud is higher than one resulting from error, as fraud may involve collusion, forgery, intentional omission, misrepresentation, or the override of internal controls. We also obtain an understanding of internal controls relevant to the audit in order to design audit procedures that are appropriate to the circumstances, but not for the purpose of expressing an opinion on the effectiveness of the group and the company internal controls. We also evaluate the appropriateness of accounting policies used and the reasonableness of accounting estimates and related disclosure made by management. We conclude on the appropriateness of management, use of going concern basis of accounting, and based on the audit evidence obtained, whether a material uncertainty exists related to event or condition that may cause significant doubt on the group or the company ability to continue as a going concern. If we conclude that a material uncertainty exists, we are required to draw attention in our audit report to the related disclosure in a consolidated or standalone financial statement, or in such disclosure are inadequate, to modify our opinion. Our conclusions are based on our audit evidence obtained at the date of our audit report. However, future events or conditions may cause the group or the company to cease to continue as a going concern. We also evaluate the overall presentation, the structure, and the content of the consolidated and standalone financial statement, including the disclosure, whether the consolidated and standalone financial statement represent the underlying transaction and event in a manner that achieves fair presentation. We also plan and perform the group audit to obtain sufficient, appropriate audit evidence regarding the financial information of the entities or business unit within the group as a basis for forming an opinion on the consolidated financial statement. We are responsible for the direction, the supervision, and review of the audit work performed for the purposes of the group audit. We remain solely responsible for our audit opinion. We communicate with those charged with governance regarding, among other matters, the planned scope, the timing of the audit, and the significant audit findings, including any significant deficiencies in internal control that we identified during our audit. We also provide those charged with governance with a statement that we have complied with the relevant ethical requirement regarding independence, and to communicate with them all relationship and other matters that may be reasonable be thought to bear on our independence, and where applicable, actions taken to eliminate threat or safeguard apply. From the matters communicated with those charged with governance, we determined that those matters were of most significance in the audit of the consolidated and standalone financial statement of the current period, and are therefore the key audit matters. We describe those matters in our audit report unless law or regulation precludes public disclosure about the matter, or when in extremely rare circumstances, we determine that the matter should not be communicated in our report because the adverse consequences of doing so would reasonably be expected to outweigh public interest and benefit of such communication. Report on other legal and regulatory requirements. As required by the Jamaican Companies Act, we have obtained all information and explanation which, to the best of our knowledge and belief, were necessary for the purpose of our audit. In our opinion, proper accounting records have been kept so far as it appears from our examination of those records, and the company consolidated and standalone financial statement are in agreement therewith and give the information required by the Jamaican Companies Act in a manner so required. The engagement partner on the audit resulting in this independent audit report, auditor's report, is Paul Williams, signed PricewaterhouseCoopers, Chartered Accountant, Kingston, Jamaica, the 1st of December, 2025.
Thank you very much, Paul.
You're welcome, Chair.
Okay, that was a mouthful. Good afternoon. We've made the transition. Good afternoon. So, we now come to the resolution in respect of the audited financials as well as the director's report, which appears immediately before the auditor's report in the annual report. And the director's report sets out the highlights of the operating results, and we now put forward the resolution as set out in the agenda and the notice, which reads as follows: that the audited financial statements for the year ended September 30, 2025, along with the reports of the directors and auditors circulated with the notice convening the meeting, be and are hereby adopted. Would a member please propose the motion? Mr. Young, I'm going to need you to move to the microphone. One is being provided to you.
Livingston Young.
Thank you, Mr. Young. And can I have another member second the motion? Can we have a microphone here from Mr. Hendricks?
Michael Hendricks.
All right, thank you, Mr. Hendricks. All right, so with the motion duly moved and seconded, we are at the point of taking questions on the financial statements. Now, meeting participants were invited to submit questions prior to the meeting to a designated mailbox and during the meeting through the question and answer functionality in the application. We will now take questions on the financial statements that were not covered earlier in the addresses.
Mic check. Yeah, Livingston Young. Livingston Young.
May I finish before we take the questions? Thank you. Now, persons in the room wishing to ask questions, we actually do not have any questions from the persons online in respect of the financial statements, nor did we get any in the email box. That's for this section of the meeting. Now, persons in the room wishing to ask questions on the accounts may do so using the microphones that will be provided as they are invited to do so. We don't need to check your mic, Mr. Hendricks. It's working. Now, it was Mr. Young? Oh, I thought it was Mr. Hendricks. I'm sorry. It's Mr. Young. All right, so we don't need to check your mic. It's working. It should be noted that questions at this time should be only in relation to the audited financial statements. Other questions, such as those relating to the year's activities generally or questions in relation to the first quarter performance, will be taken later in the meeting during the Q&A. As usual, please ensure that you direct us to the page in the financials, the page in the annual report, to which the question relates. I'm listening to hear a page somewhere between 140 and 413. Those are the pages in the annual report that contain the audited financial statements. All right. Mr. Young.
This one won't be that much is management discussion and Alice. But since you want, later will come.
That's for later, yes.
Yeah, because that one's serious, you know. All right, you can turn to page 317, note 35. Intangible. This is the student here, intangible. This is students.
While he's searching for it, please can we ensure that
intangible
Mr.
assets.
Sadler's mic is on and working?
Yeah, intangible assets. Intangible assets. All right. The intangible asset of the ORIGO, holding of IC or mix exposed to losses. No, and the group 2025-2024 of 2,030,571. Again, look explanation upon export sure losses. This is students.
I'm not clear on the question.
Not sure on the question.
This is students, like it's a loan, students loan or something like that. 2025 and 2024. It's a total asset. This is intangible assets of the ORIGO, holding of IC, ORIGO. I don't know what that signifies. Explain to me now, please.
So that's Origo.
Eh?
Origo?
Yeah, mix. It's down below, you have mix maximum exposure of losses of 1,359,000. Could I explain 2025 and 2024? Good explanation. Dash, I don't understand the signal. Explain to me.
All right, so asking for an explanation of the item in respect of the $1.35 billion maximum exposure to loss related to Origo. Malcolm?
Let me check on that and get back to you.
All right, we'll check on that and we'll get back to that
check
question.
down a bit, Mr. Chairman. Liability of status of funds of FCC. Good explanation and permanent, please. Of relationship.
Same page, the next item. You want an explanation in respect of the liability to Stratos?
Yeah.
That's described?
Yeah.
All right, so we have Mr. Stephen Ricketts of NCB Capital Markets who will provide comments here.
Thank you, Mr. Chairman. So, to the shareholder, the question about maximum exposure to loss. It's really the maximum investment in this offshore entity. So, Origo Holdings is an investment that NCB Capital Markets has in Origo. So, the 1.3 is the maximum exposure. It's not loss. It's a maximum investment that could be lost if something goes wrong.
Okay.
Jamaica.
Mr. Chairman, you could here. Mr. Chairman.
And the same matter in terms of the Stratos that you mentioned earlier. It's an offshore entity.
Offshore, yeah.
There's a maximum investment.
Yeah, I see it, ma'am. Yeah, I
sure.
see it. Yeah, I see it. Could I turn to page?
Okay. Mr. Young.
Yeah.
Yeah. So just for in terms of how we're proceeding in terms of order, yes, we're going to take your second question, and then if you have any others, we're going to take them after because we want to be able to allow everybody a fair opportunity to ask. Okay.
Sit and come back.
I'm almost afraid to say, but yes. No. I was saying you can ask the second question now, and then we'll move on.
All right, you can turn to page 304. Note 28. This is a group. All right. It's a net book value at the year. Here you have relationship of computer, software, goodwill, other. What make up the other of 59,189,000 and transaction of adjustment, relation relation classify of adjustment and changes of 40,384,000. Your net book value of 3,225,000. Get explanation it, please. This is a group. And I carry the deposit.
Oh, this one?
All right, Mr. Sadler.
3225? Yeah. Oh, okay. So this note, Shareholder Young, it's broken out into various categories. So the first three, trade name, core deposit, well, the first two, trade name, core deposits. This occurs when we acquire a subsidiary. So this would have been when
Which subsidiary that, sir?
Guardian Holdings Limited and Clarion Group Limited. So when we acquire a subsidiary, we value these different aspects of the subsidiary, their trademark, their customer deposits, etc. It's valued and then we depreciate it over a number of years. So the reclass that you're also seeing there, let's say on the computer software, you reclassify there as you build a software and it's placed into use, it is reclassified. So we reclassify things in and out of the category depending on the status of the item. So that small amount, 54, that you mentioned, 54,189, that would also be coming out of valuations done when we acquired subsidiaries as well. So it's related to the first two categories, trade name, core, deposits, etc. There are other things that we value that are not material, that we place in other as well.
So this make up the net book value for the year of what, 3,200,000 something?
That's for that 3,225,274 is just for the trade name. So the grand total intangible, net book value, if you go to the far right, total, that's the number there. The net book value of 48,530,871. That's a grand total of all the categories to the left.
Because I see a breakdown in the middle of software of 2,666,000,000. The little breakdown in software, what that signify? I see it in the center of the, you see it, Mr. Chairman? The breakdown, you have
it's the third column that he's asking about,
yes,
Malcolm.
so computer software are all our applications that we use. So for example, when you go in the bank and you do a transaction, we do it in the banking system. That's in computer software. So whether you're internet banking, you're mobile banking, all the applications that we use to serve you, they're in this category called computer software.
Oh, because I see.
All right, thank you. Mr. Young, I feel as if we're morphing into a number of questions. Thank you so much. All right, Mr. Golding, we duly did the verification, as I confirmed to you earlier. So please go ahead.
And I'm not AI. TWG. Thank you. Mr. Chairman, my comments will relate to page 141 on the net profit and page 145 on the dividends paid. And I would commence by saying hearty congratulations to the team, to the staff, members of the board of directors on the performance of 2025 of the net profit of 36.9, which the group CEO and the group financial controller officer and the auditors have confirmed. The question is, and before the question, I want to make a statement that some of us here take dividends or dividends rely on it quarterly to go to the supermarket. So zero dividend is not an option and should not going forward for NCB. When I listen to my CEO, and he says that the 2025 performance is the best effort in history. And then I compare it, and you state that it's 71% over the prior year. Tell me, help me, assist me to understand this. Why is it that you're able to pay $2 in 2024 and $1.50? Zero dividend in first quarter for 2025. Help me to understand this just a little bit better. Chairman, I'm disagreeing with you. That is because of the asset tax. Because you have surpassed this. And in spite of the asset tax that you pay, I joined you in striving to achieve that, bringing that to zero, because it only means more available funds to pay me and us here dividends. So I join in that. But I cannot accept that as the reason why you paid me just $1.50. I am short. You owe me 50 cents. So I'd like to hear, help me to understand. Is there some constraint on you, imposed on you during the year why you could not pay me that extra 50 cents in first quarter? And I'm delighted that you're not making the same mistake this year. So please, I sit while you explain. Help me to understand this just a little bit better.
Thank you for the question. I guess just to clarify the question so that I make sure I get it right. The question is, why did it decline from $2 the prior year to $1.50 while profits increased year-over-year?
71%.
Yeah.
Net
okay.
profit.
Yep, understood. So when we first started paying dividends again, you'll recall in 2023, at the end of 2023, when we paid a 50-cent dividend, you'll also note that the profitability in that year, in 2023, did not actually reflect the ability from a profit perspective, but we paid dividends. So we started to restore dividends because we realized that it was really important to prioritize, at the very least, the restoration of dividends whilst we were doing things to increase future profitability. But in that year, when we first started paying dividends, we were paying dividends out of retained earnings. So in other words, I'm just trying to point out that the correlation between earnings and dividends is not perfectly linear, because what we started to do there was we actually started to front-end load the payment of dividends, and then earnings grew the subsequent years, and at that point, in the quarter, so what's our uses of free cash flow? As we said, we always use free cash flow for, one, we have earnings that have to get used in the businesses to maintain their increasing capital requirements, IFRS 17, Basel III, and the various increasing in the capital requirements in all of the businesses, so a bunch of it's retained. And secondly, there's the reduction of debt that has to happen because we need to bring down the whole holding company debt. And so our focus right at the beginning was to get to the 50 cents, maintain it at 50 cents a quarter, try and maintain that consistently. We did front-end load it by starting it when we did not have the full predictability to it. As a result, we ended up missing a quarter last year, and we regret that, but we missed a quarter. We do regret it, and that's why we've worked very hard to make sure that we've maintained it. And so for 7 of the last 8 quarters, we have paid out the 50-cent dividend. And for the last 4 quarters, we have paid out the 50-cent dividend. So fully appreciate your passion and your sensitivity and the importance and the responsibility we have. But just technically explaining it is the technical explanation is there are capital requirements in the various businesses. As we grow our asset base, we have to increase our capital in order to maintain the capital ratios. There's also a requirement at the holding company, we have a need to make sure that we bring down the leverage in both in Guardian Holdings and in NCB Financial Group so that we actually reduce the risk in the business and make sure that it is long-term sustainable. And at the same time, maintain a consistency of dividends. And then the last part is having maintained consistency, then seek to increase.
Sir, I've heard your response. I'm not satisfied. I am requesting that 2026 going forward, you maintain, because we're dealing with current year profits from which you had a 71% increase to pay out the current dividend declared during the year. And Chairman, I ask you to bear in mind this. And remember, you're supporting me when you cause the company to act with wisdom and understanding and make the payments due to the shareholders on a timely basis. All right? Thank you.
All right.
CEO, Mr. Golding, can you turn me on, please? Mr. Golding, we go back a long time, so you are unambitious to just expect that we should maintain a 50-cent dividend.
No, that's what.
That's what you said.
No. When I withdraw what I said, and increase, because his explanation did not explain why you have a 71% increase and you're paying me 50 cents less. And I'm inquiring about 50 cents. Now, going forward, we're talking about $50. Okay? Okay. Dollars, not cents. Thank you. I'm sure
Okay.
you support that, Chair.
100% still.
All right. Let's take our next question or comment.
I'm asking a question. I'm Dorothy Minot, and I refer to page 412. It regards the statement, the group's main insurance subsidiary, Guardian Holdings Limited, announced the successful completion of the sale of the Netherlands insurance brokerage business. Here I'd like to know, why was the Netherlands business sold?
All right. Shall we ask Rob to answer that question? Group CEO.
So to some extent, it's connected to, probably connected to the last question. So what's really important for us to do is to make sure, we have a lot of capital, right? So it's a very big company with a lot of capital, and it's really important that we make sure that all of our capital is actually earning a return. It's earning a return, and it's earning a cash return that we can use to pay dividends. And so one of the things that we have to do, and you heard Mr. Chinapu earlier on speak about a capital warehouse. So one of the disciplines is making sure that we scrub every single dollar that's invested anywhere across the entire group and make sure that those investments are earning an appropriate return. Where they are not earning, where we can actually sell the asset for a better price and we can take the money and we can reinvest it at a higher return, that's the opportunity. Sometimes that happens because some other party can actually earn, sees an opportunity where it's more synergistic with their business and they have a strategy, and as a result they'll pay us a much higher price so that our foregone return, and you heard Mr. Chinapu say our earnings on the business, or actually Mr. Sadler say that the earnings on the business we sold were not that high, but we were able to get a big price for it, so we sold it, and then we could take that money, use it to pay off debt that costs us interests, and therefore improves our profitability, or use it to invest in loans or invest in growth of the insurance business where we can earn a higher return. In very simple terms, we're always just looking at asset A or asset B. What can I earn on asset A? Sometimes I can earn 15% on asset A, but I can earn 20% on asset B. And if I can do that, what I'll do is I'll sell asset A so that I can invest it in asset B and earn 20% so that we earn more. So in that case, we were able to, we had better uses of the money than what we, for the price we were getting paid.
So congratulations, you made a good move.
Thanks, Ms. Minot. All right. Questions on this end?
All right. Raul Pinnock, shareholder. Forgive me, I don't have page numbers for you, but following on the questions that have been asked, I have two areas of focus. One is the business outlook for the core business going forward, and the dividend payout ratio. So, firstly,
So, Mr. Pinnock, those questions are both for a different segment of the meeting.
So you're going to have another Q&A section?
Yep. This one is on the audited financials specifically, so that's why we're using the page references and so on.
You promise?
So both of those, I do promise.
All right.
Okay?
Right. No problem, as long as I get my question.
Once nothing happened to me and I'm here, you'll get your chance later.
Good morning, everyone.
Morning.
Board. I'm Carrie Berry, shareholder. I bought actually in the IPO and been buying since. Congratulations, board, management, for your steadfast prudence in bringing this company back to where it should be. It is an icon in our Jamaican landscape. It's something that all of us can identify with. I am an account holder as well. And I know you said that we should speak to the financials, but I'd just like to give kudos to you on your recent IPO that closed. And somebody actually called me to assist me. So your customer service, fantastic. And I know that it's not in this section, but I just wanted to make comment and say congratulations on your exemplary customer service. Somebody actually called me, which was actually very good. Okay, let's turn with us to page 141, consolidated statement of comprehensive income. Okay, I'm just not understanding. I just need a little explanation, please. Financial income from insurance contracts issued, you did go into great depth. It's a negative of 747 million, and then it went to 5.542 billion, I think, or yes, 252. Could you just explain this financial income from insurance contracts issued? Why is it a negative and went to a positive? I'm not really understanding what that's saying there.
All right.
Thank you.
Thank you, Ms. Berry. So Sadler?
Yes,
Malcolm?
I'll make an attempt on it. Ian can determine if he wants to add more. So there are insurance contracts with an investment component. So it's not just insurance, it's also an investment that you get a return. So the company carries those on its books as well. So where there are movements in terms of market value, interest, adjustments, etc., assumptions made, there are gains or losses or income and expenses in any particular year. In this particular year, it was an upside for the company in terms of gains. But you can see swings each year. So the prior year, you're seeing a negative. But it depends on the assumptions and market movement, etc.
Thank you. And may I ask another? It's page 289. Notes to the financial statement, total operating expenses. The group and the company. I'm looking at the group side. Credit card rebates. Credit card rebates, operating lease rentals doubled, and operating losses. The operating losses went up 25%. Could you just make comment on those three things? Thank you.
Okay, I'll start with operation.
Yes.
Give me the three again. It's operational
There were
losses.
just credit card rebates,
Yes. What's the third one?
The second one was the operating lease rentals. It doubled, and the operating losses went up 25%, about 22%.
Okay, so I'll start with operational losses.
Yes.
So over the last 2 years or so, you'd have seen, or you'd have heard us from quarter to quarter or year after year indicating that we are, in terms of governance, our controls, that we have been tightening up, and we have actually been cleaning up as well and taking write-offs to clean up the books as we strengthen the governance in terms of going forward. So there would have been balances, legacy balances, from many years ago that would have written off during over the last 2 years or so. If you notice, when I went through the most recent quarter, I would have indicated that the operational losses have improved, which means they're lower. So we're getting better. So you'd have seen those significant losses being booked in those two years that you're looking at here. The credit card rebates, as we have more transaction volumes, our customers using our credit cards more and more, there are rewards that you get, whether cash, etc., points. That's what so it's higher here, meaning that the customer is getting more by using their card. They're getting rebates, they're getting returns on it. Yes. The third one, operating lease liabilities. I believe for this one, I think a number of the contracts renewed during 2025. So we would have adjusted rates, etc. A number of them renewed in the year, and that's the increase you're seeing here in terms of all our leases during 2025.
Thank you so much for those explanations.
Okay. Thank you, Ms. Berry.
You're welcome.
Thank you, Mr. Sadler. All right. Mrs. Clark Allwood.
Thank you, sir. Just some clarity, page 317. Is this ORIGIO or ORIGO? Which is it?
IGO, Origo.
Okay, so the I is not supposed to be there at the end.
Yes, it should be there. ORIGO.
No, you have ORIGIO in one instance.
Oh, okay. Yes, you're right.
That's a typo. It should be
That's right.
Geo.
So it shouldn't be Origio.
Thank you, sir.
Origo. Yes.
Right. That's why I like to get paper to mark. No. You know, Mr. Golding made a point. And with due respect, sir, I really believe you're defending the indefensible. With due respect. Because I listen to all these wonderful, numbers that everything 20-odd%, 19%, and I'm saying, oh, wow. And then what a deflation. Thank you.
Okay. I think we have one more question.
Sir.
Oh, I'm sorry. 2. No. We want to get out of here this afternoon. Yes.
My question is on page 289.
So we need your name, please, sir. I actually can't see you.
Eric Heslop.
I'm told to move the column. Well, I'm not sure that my workout can sustain that. Yes.
Yeah. Name is Eric Heslop.
Yes, Mr. Heslop.
My question is posed within the context of efficiency, also eloquently stated by our chairman, ECG. On page 289, there is, in the column, the company, management and royalty fee increased by 40.5%. Also, other operating expense increased by 74%. I would like an explanation. That's the reason for these increases, because my belief is that operating expense should drive improvement in a company's operation and also efficiency gains.
All right. Malcolm?
So the two lines, okay, so management and royalty expenses.
Yes.
Yes, and other.
Oh, the company. Okay. Yeah, so this item normally have, okay, as you see here, management fees that are paid. If there are any other expenses that are associated with generating the management fees or the services provided in relation to the management fees, we also make that payment. During this year, we would have had some additional payments to make in relation to the management contracts that we have. But you should see, as we go into the new financial year, into the first quarter, there wouldn't have been a recurrence of this in quarter one. So in terms of the improvement that you're looking for in terms of efficiency, you will see that going forward. But in terms of these 2 years, there are expenses that we would have taken that we don't expect to recur. Similar to the operational losses, we took those. So over the last 2 to 3 years, you will see expenses that looks a bit abnormal compared to Q1 that I gave you the info on earlier and other quarters going forward. The other, I think the other category is other. I think this is also similar in terms of, this is not management fees, but these are other fees that we may have paid during the year. So for example, when we did the 144A transaction, there are expenses that we would have had to do those transactions as we refinance bonds, etc. There are expenses at the holding company level. And as you would have seen, in 2025, we were pretty active in the market during 2025. So some of those expenses you may be seeing in other, among other things that we may have done. But I do not expect going forward for you to see 622 million in other for the holding company. You shouldn't see that going forward. But 2025 was a very busy year for the holding company.
All right, thank you, Malcolm.
Good afternoon, Lancel Bloomfield here, shareholder.
Yes, Mr. Bloomfield.
Mr. Chairman, your net loan amount now stands at 618 billion. What percentage of this falls within
Sorry, Mr. Bloomfield, you can help us. Where are we?
Page 19. And that
Page?
graph, page 19.
Oh, that's not the financial.
All right, not in the right section for this segment of the meeting. You want us to come back to you later?
Okay,
in the
sir.
Q&A?
I
Okay.
will ask my next question. Page 147, note 18.
Yes?
Mr. Chairman, in 2024, 3.4 billion was due from other banks. And in 2025, this line item has jumped to 31.62 billion. What has caused this increase? That
All right.
page 147, note 18.
So Sadler.
Yes. Oh, okay. Sorry. Oh, I thought it was on the liability side. So this is on the asset side, right? Due from other banks. So as I mentioned earlier in terms of the debt raise, in 2025, the international debt raise, the cash that would have come in on that transaction would have been placed on deposits with our bank as we pay down the debts. So we would have raised funds in July of 2025 that we would not have used the funds immediately. And we raised $225 million US dollars. So that's what you're seeing here. We would have used up some of it by September 2025 to pay down some debts, but not all. So we still had cash, significant cash levels in that.
Sir, the line item that says due from other banks.
Yes.
So I am not really understanding. No, I don't want that. I want it from the chairman. I don't have time to read through the encyclopedia. So I am asking you for a clarification as to.
I think you need to allow Mr. Sadler to
finish
the explanation before you ask the follow-up.
Please go ahead, sir.
So cash came in during the year, as I said earlier, as we did a debt raise. So the cash levels were still high as at the end of September because we didn't use all the cash as at September 2025. We used some of the cash. We used an additional amount in December 2025, and we'll use an additional amount by March 2026. So if you look at the financials for March 2026, a few months from now, this number will be lower.
Okay.
Yes.
One clarification, just in case. Daddy, sorry, just for clarification, I'm not sure if there's a due from other banks means we've got a deposit in another bank. And so when we've got cash, when we have extra cash, we put it on deposit in a bank account somewhere. Most of the time, we'll put it in an NCBJ bank account.
Thank you very much, sir.
Yeah. So that, and as Mr. Sadler said, the reason we had extra cash was because we borrowed the money, we got the money in our hands just before September, and we are using it to pay down debt after September. And while we hold it, we either hold it at the BOJ, or we hold it in an NCBJ account, or we hold it in a foreign bank account if it was required to pay off foreign debt.
Thank you very much. That clarification makes better sense.
All right. Thank you, Mr. Bloomfield.
Good afternoon. Nicola Borrelli, shareholder. On page 301.
Sorry, I'm not sure if they heard your name.
Oh, Nicola Borrelli. Page 301, note 27, leases. I know Mr. Sadler answered another question that there were a number of leases that were renewed. However, in 2024, there's 3.474 billion, and in 2025, the rights of use of assets of buildings has gone up to 6.678. That's a substantial increase. From my calculation, over 90%. What could be the rationale for such a great increase?
Yes.
We understand renegotiation, but 90-odd%?
Yes. So in 2025, as a part of the renegotiation, the lease period would have been longer. So let's say, for example, prior to the renewal in 2025, the lease period would have been, let's say, 3 years, 5 years. So the right of use asset that you're seeing here is the value over 3 to 5 years. So if we do a 15-year, what you're seeing here is the value for 15 years. So it's higher. So that's the reason.
It would have been good if there was a note to that effect. I don't think I read that anywhere. because then I was hoping that the dividends could kind of increase in somewhat of a similar-ish manner, because there's some serious negotiators on the other side. We need to get them on our side. Thank you.
All right. Thank you, Ms. Borley. All right. Thank you very much, members, for the questions and comments that we've received in this section. And we therefore now come to put the resolution to the vote. So as a reminder, the resolution that has been duly proposed and seconded is that the audited financial statements for the year ended September 30, 2025, along with the reports of the directors and auditors circulated with the notice convening the meeting, be and are hereby adopted. So, as usual, our voting procedure, members online, please indicate by clicking on the Vote Now button, which should be appearing, and selecting for or against. And once again, as always, we're asking you to do so within the next 30 seconds.
The way you've built your career into a masterpiece, so you can have
the audio
days that look like
down?
a work of art, will be the legacy that will live on.
All right, members present in the room, if you are in favor, and including downstairs, if you are in favor of the resolution, please indicate by raising your hand, the hand with the
all
band.
focused to give you what you deserve. The finest
Thank
things
you.
in life.
And anyone against the resolution, please indicate by raising the hand. All right. We'll now await the results online. If you want to turn the volume back up now is a good time. All right. We're all done there. Chair, as you can see, we have a clear majority, I believe.
I
but
declare the motion carried.
Thank you. The next item on the agenda is the declaration of a final dividend, and the resolution is as follows. That the interim dividends per ordinary stock unit of 50 cents paid in June 2025, 50 cents paid in September 2025, and 50 cents paid in December 2025 be treated on the recommendation of the directors as the final dividend for the financial year ended September 30, 2025. Would a member please propose the motion?
I am Winsome Wilkins, and I'm proposing the motion.
Thank you, Ms. Wilkins. Can I have another member second the motion?
David Mullings, I second the motion.
Thank you, Mr. Mullings. All right, let's proceed through to the voting. Once again. Wait, because we don't reach that part yet, Mr. Young. Members online, please indicate by clicking on the Vote Now button and selecting for or against on the AGM platform for this resolution. Meanwhile, members present in the room, please indicate if you are in favor of the resolution by raising your hand. Including the members downstairs. Thank you. All right, now is there anyone against the resolution? You have an explanation? I think the only explanation could be that you want to give the money back.
No, I have an explanation why Mr. Chairman, would Mr. Ali Chair,
all right.
I would ask for your permission.
So hold a second. Mr. Young.
Yeah.
On a point of order here, we're actually just voting. So there's two options. You put up your hand to vote for, or you put up your hand to vote against.
But me clear myself, so I have an explanation.
Yeah, man, that's okay. Just put up your hand to vote against. I'm afraid that we can't take the explanation during the vote. All right? I'm sorry about that. But you can, when we come to the Q&A later on, you can give us the explanation. Yes, but I'm afraid that I, like you, am bound by the rules of order. All right. So we're going to take that vote for members voting against the resolution. Can you raise your hands, please? All right. So I see one against there and one against there. I'll pass around the collection. I saw your hand, the one over there. Okay. We have seen... Okay, 3 against. Can we see the results from online? Are they ready yet? All right, so Chair, you would have noted those for and those against online and in the room. Can you declare the result?
I declare the resolution carried.
Thank you. We move on to the election of directors. Sorry. Article 94 of the company's Articles of Incorporation provides that 1/3 of the board, other than the managing director, that is to say our group chief executive officer, and deputy managing director, not applicable, or if the number of members of the board is not 3 or a multiple of 3, the number nearest 1/3 shall retire from office at each annual general meeting. The directors retiring under this article are the Honorable Michael Lee Chin, Order of Jamaica, and Mr. Gary Brown, both of whom, being eligible, offer themselves for re-election. The proposed resolutions are therefore as follows. First, that Director, the Honorable Michael Lee Chin, OJ, retiring pursuant to Article 94 of the Articles of Incorporation, be and is hereby re-elected. Would a member please propose the motion?
Aye, so.
Thank you. Anela McFarlane, shareholder.
Thank you, Ms. McFarlane. And could we have another member second the resolution?
Mark Anthony Barton, shareholder.
Thank you, Mr. Barton. All right. Let's proceed through to the vote, shall we? Once again, members online, please indicate by clicking on the Vote Now button and selecting for or against on the platform for this resolution. And meanwhile, members present in the rooms, please indicate if you are in favor by raising your hand. Right? And thank you, thank you. Any against, please raise your hand. All right, we now wait for the results online.
The way you've built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve. The finest things in life.
Opening an investment account is easier with Go IPO. Crush the paperwork and get online with NCB Capital Markets' fully digital investment account opening platform. No need to visit an NCB Capital Markets location. You can upload any required documents like your ID, proof of address, and TRN from the comfort of your home. Plus, you can open the account with joint account holders. Be ready for the next IPO. Visit goipo.jncb.com to open your investment account today. Conditions apply.
All right. Chair, the results from online are shown, and you would have seen the results in the room.
I declare the motion carried.
Thank you. The next resolution here is that Director Mr. Gary Brown, retiring pursuant to Article 94 of the Articles of Incorporation, be and is hereby re-elected. Would a member please propose that resolution?
Mark Anthony Barton, shareholder.
Yes, thank you, Mr. Barton. And could I have a member second? All right, well, I didn't hear anybody because of the mic.
Anatol Clark Allwood, shareholder. Oh, sorry. I am so sorry. Anatol Clark Allwood, shareholder.
Thank you, Ms. Clark Allwood. Let's proceed once again to the vote. Members online, please indicate by clicking Vote Now and selecting For or Against. And meanwhile, members present in the rooms, please indicate if you are in favor by raising your hand.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through text, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
All right, Chair, the results are showing.
I declare the motion carried.
Thank you. Next, Mr. Lance Dominic Rampasad was appointed a director of the company on December 4, 2025. Mr. Rampasad, as mentioned, I think earlier, is a chartered accountant. I'm not sure if all of this was mentioned earlier, but he is a chartered accountant with over 30 years of experience in finance, governance, and strategic leadership. His profile is on the NCBFG website and appears, I hope, in the meeting platform. Under Article 100 of the company's Articles of Incorporation, Mr. Rampasad's appointment expires on the date of this meeting, and being eligible, he offers himself for election. The proposed resolution listed in the notice and online is therefore as follows: that Mr. Lance Dominic Rampasad, having been appointed during the year, be and is hereby elected a director of the company. Would a member please propose the motion? All right. Mr. Hendricks proposes the resolution. And can I have another member second?
Andrew Pearman, shareholder.
Mr. Pearman seconds the resolution. All right, let's proceed then to the vote. Once again, we'll start the voting online. Members online should click Vote Now and then indicate whether for or against. And in the room, we ask that persons indicate if they are in favor by raising their hands. Thank you. Those against? We now await the results online.
Opening an investment account is easier with Go IPO. Crush the paperwork and get online with NCB Capital Markets fully digital investment account opening platform. No need to visit an NCB Capital Markets location. You can upload any required documents like your ID, proof of address, and TRN from the comfort of your home. Plus, you can open the account with joint account holders. Be ready for the next IPO. Visit goipo.jncb.com to open your investment account today. Conditions apply.
The way you've built your career into a masterpiece, so you can have days that look like a work of art, will be the legacy that will live on as your crowning glory. Now let us help put the finishing touches on your brilliance with Clarion's vast experience, deep expertise, and digital tools, all focused to give you what you deserve. The finest things in life.
All right, voting has closed and majorities are evident in person and online. Chairman?
I declare the motion carried.
Thank you, sir. We move on to director's remuneration. The next items on the agenda are resolutions regarding that, and the first is as follows: that the directors be and are hereby empowered to fix the remuneration of any executive director. Would a member please propose that resolution? All right, can we have a microphone for the person who is proposing?
Dr. Cornelia Walters-Jones, I propose.
Thank you, Dr. Walters-Jones. And can I have a second member second the resolution?
Arthur Ellison, I second the resolution.
Thank you, Mr. Ellison. Seeing you. Okay, somebody verifying the yellow? Yes, I'm told it's there. All right, so we will now proceed to the vote. Members online, please indicate by clicking vote now and selecting for or against. And in person, can persons please indicate by raising your hand if you are in favor of the resolution? Chair, I need you to look. Thank you. Any against? All right. So we will now simply await the result online.
This is your smartphone. These are your NCB credit and prepaid cards. And this is NCB Pay. NCB Pay transforms your phone into your wallet. Secure, quick, and always with you. Whether it's paying for groceries, grabbing coffee, or getting gas, NCB Pay has you covered. Using advanced technology, NCB Pay ensures that your transactions are protected with top-notch security. Skip the lines. With just a tap, you're on your way. Don't just pay, NCB Pay. Download the app today.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
All right, so a clear majority is being shown online and in person. Chairman?
I declare the motion carried.
Thank you, sir. Now, would a member please propose the next resolution, which is as follows: that the total remuneration of all the directors combined, other than any executive director, for the financial year of the company ending September 30, 2026, be and is hereby fixed at $121 million, which remuneration may include such share incentive scheme for directors as may be determined by the board. Someone to propose?
Mark Anthony Barton, shareholder.
Thank you, Mr. Barton. And can we have a member to second? Is that Dr. Walters-Jones?
Yes, I second.
Thank you, Dr. Walters-Jones. All right. Let's go to the vote then. Once again, members online, please indicate by clicking the Vote Now button and selecting for or against on the platform. And members present in the room, if you're in favor, please indicate by raising your hand. Thank you. And those against? We now await the result online.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
The results are showing a majority online and in person. Chair?
I declare the motion carried.
We now come to the appointment of auditors. PricewaterhouseCoopers have agreed to remain in office and we wish to retain them. And so I'll ask for someone to propose a resolution set out in the agenda and the notice as follows. That PricewaterhouseCoopers, having signified their willingness to serve, be appointed as auditors of NCB Financial Group Limited until the conclusion of the next annual general meeting of NCBFG at a remuneration to be agreed with the directors. Would a member please propose that resolution?
Arthur Ellison.
Victor Francis.
And you don't have to see me, but I propose the resolution.
Thank you, Mr. Francis.
Are there two of us who propose it?
I heard Mr. Francis.
Yeah, my name's Arthur Ellison, and I might have said it.
Oh, okay, that's fine. Thank you, Mr. Ellison. Did I not hear Mr. Francis? In the room downstairs. Thank you. Mr. Francis, we're going to take you as having seconded the resolution.
Okay.
All right. Mr. Brown, our lead independent director and audit committee chair, not sure if you wish to say anything with respect to auditor performance at this point.
Be happy to. We have, obviously, as I mentioned earlier, the audit committees of the organization meet with PwC on a very regular basis. And we have a good working relationship. I think they are completely independent, of course, and they are very focused on the issues that could be possibly challenging to a financial institution. So we work very closely with them to ensure that the governance around all of those matters is well taken care of, and that our working relationship with PwC is challenging at times because we may have different opinions about matters, but at the end of the day, we resolve all issues prior to our financial statements being prepared. So we're quite comfortable with renewing PwC for an additional year, and we will look forward to working with them again over the course of 26.
All right. Thank you, Mr. Brown. So we will now put the resolution to the vote. Members online, please indicate by clicking once again, vote now, and then selecting for or against on the platform. Members present in the room, please indicate if you're in favor of the resolution by raising your hand. Thank you. And those against? We will now await the result from online.
Today's woman is not just an entrepreneur, a mother, or the girlfriend that gets all the girls together. She's all that and much more. We call her a queen. She's driven to live life to the max, and nothing should slow her drive down. That's why Guardian General's Queen Guard Motor Insurance was created with this woman in mind. Delivering benefits like 24-hour roadside assistance, uninsured motorist protection, windscreen coverage, replacement of personal belongings, speedy claims settlement, and so much more at affordable premiums that won't break your pocket. For more information, contact your broker or call us at 876-935-6681 or toll free 888-468-3474.
Most fraud cases stem from one simple action: clicking on a link or sharing personal information online through text or over the phone. Remember, NCB will never send links through text, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or credit card number. Don't be quick to click or share your information. Don't fall for fraud. For more info, visit jncb.com/protect yourself.
Thank you. Now, Chair, once again, the results are showing online and in person a majority. Would you declare the result?
I declare the results carried.
All right, the motion is declared to have been carried. Now, just before we go into the question and answer segment, there is a brief video that we will show, which has been teed up apparently so that I can get a glass of water.
At NCB Financial Group, we remain proud nation builders, committed to empowering people, unlocking dreams, and building strong, resilient communities across the region. The momentum we achieved in 2025 financial year was not accidental. It was the result of an unwavering commitment to our operational framework of efficiency, governance, and customer experience, EGC. In a challenging and evolving economic environment, we remained disciplined. We reinforced our core. We fortified our systems. We strengthened our strategic posture. This focus delivered results and showed strength in consistency. Our cost-to-income ratio improved to 64.29% from 73.56%, a reduction of 927 basis points. Our return on equity increased to 12.46%. Our consolidated net profit grew by 71%, reaching $36.9 billion, the highest on record. This growth was influenced in part by the gain from the sale of a subsidiary, as we continue to streamline operations and sharpen our focus on our core businesses. But financial performance alone does not define progress. Throughout the year, we remain guided by our 4 strategic pillars: strengthening customer relationships, delivering as a one-stop shop, optimizing efficiency and productivity, maintaining world-class standards. To drive operational efficiency, unlock synergies across subsidiaries, elevate service delivery, and enhance the group's ability to deliver consistent value to customers and shareholders, we established 2 strategic centers of excellence across NCB and Guardian: the Investment Management Center of Excellence and the Pension Fund Administration Center of Excellence. We also diversified our funding profile through the successful issuance of a $225 million senior secured note in the international capital markets. At the heart of our strategy is a clear belief: financial performance must translate into real value for customers and sustainable returns for our shareholders. Across the region, we continue to support wealth creation, helping individuals, families, and businesses build security, grow assets, and realize their aspirations. Through the NCB Foundation and its partners, we raised $459 million for the Hurricane Beryl recovery efforts, advanced education, and healthy lifestyle programs through the Guardian Group Charitable Foundation, and promoted environmental sustainability through the Clarion Foundation's tree planting and conservation projects. We thank our customers for their trust, our employees for their continued commitment, our suppliers for partnering with us to deliver excellence, and our shareholders for believing in us and staying the course. As we look ahead, we do so with confidence. We are more resilient, more disciplined, and better positioned for future success.
All right, thank you. So as we come to this segment, please, I ask that we all bear in mind that there are a number of different sources from which questions and comments are coming right now. We do have some questions that we received in the email box before. We also have some that are coming on that are coming through online using the Q&A functionality, and we have 2 rooms that we're using as well. I am first going to take the questions that were received by email. They are not many. And then as we proceed, we will take the questions in the room and the questions online. All right, and there was a question about asset tax. I believe that that has been robustly answered in the opening remarks. Then let's see, I have a question here from Thomas Rolston. We have a couple questions about the NCB share price, which maybe we can ask our Group CEO, Rob Almeida, to address. Please explain why the NCB share price continues to decline despite the increased quarterly earnings of the company.
Don't
know if anybody can answer the question, but you can comment.
Share prices. The focus is keep on increasing the value of the company and the value per share. That's what we focus on, and the price that any 2 parties trade on the market is something that we can't control.
All right, thank you, Rob. You can keep the mic. Leston Ferguson asks, as a majority shareholder of Guardian Group, will you consider influencing a stock split to boost liquidity and encourage greater trading of the shares?
So we've looked at stock splits in the past as a way to increase, to see if it has any increase in share price. The historical data would suggest that stock splits do not actually increase share price sustainably, and so at this point we're not looking at it, but we continue to look at any way that we can to increase shareholder value and increase liquidity.
All right, and one more there for you, Rob. What brilliant new ideas should shareholders expect from the NCBFG team in 2026? Just as broad as that.
I think you heard from the CEOs of the 3 main subsidiaries in terms of the various things that are focused on, and I think they mentioned them in their respective comments by Cherie, Ian, and Ian.
Okay, let's turn to a question in the room. Mr. Pinnock.
Yes, sir.
Promise met.
Thank you, sir. Raul Pinnock, shareholder. Mr. Chairman, I see on I see on Instagram that Mr. Sadler can put up 225 pounds on the bench. It's a bold
That
claim.
was the question?
I expected to see you. But allow me to make a bold effort at my questions. For me, Mr. Sadler and Mr. Almeida. In terms of the outlook for the core business going forward next year, as the Toma sale anniversary is out, and by my calculation, that's $15 billion, more than 40% of consolidated profits. And then pre-Hurricane Melissa, we had credit impairments increase 18%, at about 10.3 billion. So in light of those things, my first question is really about the outlook for the core business. And then if I may, as I mentioned before, as far as dividend payout ratios, I think I heard Clarion mention 50% and leaving the accounting peculiarities of NCBJ to one side and that 125% payout. Guardian Holdings is still, I mean, it went from 21 to 29, which is good. If that trend continues, we can get to 37 this year. They talk a lot about wanting to get to 50, right? But with all of that paying into the holding company, we as holding company shareholders saw a payout ratio less than 16%. So by my reading of the figures, the interest cost is like 10.8 billion at the holding company, is probably the biggest impediment to the dividend payout ratio. So based on what's been presented here today, net gearing is going down, and profits are going up. So just to sum both questions up: one, what is the outlook for the core business? And two, what can we expect in terms of dividend payout ratios, particularly from GHL going forward, and then naturally from NCBFG?
Rob?
Sure, I'll answer. The core business, and we spoke, I think, if I remember right, last quarter indicated it was the closest thing to, there's always ups and downs. So we'll have like fair values sometimes going up, sometimes going down. We have some loan losses up or down. So there's always some degree of noise. But on the whole, I think it indicated like our last quarter was about as close to core run rate as we have. And if you take a look at the current quarter just released, and you adjust it for Hurricane Melissa, and you adjust it for the asset tax, you'll kind of see what our core run rate is. And that core run rate would be consistent with kind of our 2025 performance, but without the Toma. So in other words, we're kind of running at a core run rate that is equivalent to 2025 without the one-off. So that would so that's on the core run rate, and yeah, so that's kind of where we're running right now. In terms of the ratio, so always communicate 3 key metrics. We want to get to over 15% ROE, 50% payout ratio, and a cost to income below 60%. Similar metrics are applied to the subsidiaries, and you've heard them comment on it in terms of their attempts to get there. To use the analogy that Chairman used earlier, there's horsepower, and you have to reduce friction. As you point out, the number one friction we have is debt and the associated interest. So the big focus is using free cash flow to kind of pay out dividends, because we understand the requirement and the expectation. But in order to get to growing dividends, we have to pay down the debt. And as we pay down the debt, the interest cost goes down. And as you point out, for Guardian, it's about continuing the growth in their payout ratio. So to continue on that trajectory. And as we continue to improve performance, we'll get more dividends coming up at the same time that interest cost goes down. So we have to increase the horsepower, more dividends coming up, interest going down. The interest going down is our debt reduction plans and our debt reduction progress will cause the interest cost to go down. And as you've heard from the subsidiaries, between earnings performance and Guardian continuing to focus on increasing their dividend payout, we'll approach the targets that we're seeking.
Thank you.
Oh, sorry. Just before we get to you, Mr. Elston.
Right, Robert March.
Yes, Mr. Marsh.
All right. What I noticed that NCB Group, Financial Group, has two engineers on its board, Mr. Howard Shearer and Mr. Michael Leachin. So what I'm thinking is that, since recently NCB helped out another company in Jamaica, gave them billions of dollars in loan, would they consider and bringing nuclear SMRs to Jamaica, giving a loan to some company where we could lower electrical bill and help with medical facilities and all of that? Would NCB consider that in the future?
All right. So I'm not sure if Mr. Almeida wants to take that.
I don't think it's
I was actually going to say, so NCB would not be, it's not in the business of generating or creating energy. So just in terms of would NCB produce energy, the answer is no. In terms of lending, absolutely NCB, we lend to all forms of energy plants. So we would, and it was just subject to our normal credit underwriting and what the normal things you look at to make sure we do good quality credits. But absolutely, we lend to the wind farms. We lend to, we arrange financing for Wigton, for BMR. We lend to JPS. We lend to the various energy producers in the country today, and we would be very happy to lend to future energy sources as well. There's no reason why we wouldn't do nuclear. It would be about, from a lending perspective, it would be about the equity capitalization, the security of the contracts that are provided, the power purchase agreements. So we want to make sure that there's a revenue flow that's coming, that's secure, so that we ensure that we don't have bad debts at the end of the day.
All right. Thank you, Mr. Almeida. Yes, Mr. Elston.
Thank you, Chairman. Mr. Almeida, I heard you comment a little while ago that there is a severe problem from cost income in some debit and credit card work that you have to do at the center of much of your calculations and correcting a lot of errors that seem to have occurred. Obviously, it's something which is, as I say, might have concerned you. But I did wonder, to what extent have you advanced in correcting whatever the problem is and putting ourselves in a position to think of the one objective that I expect Mr. Golding and most of our other shareholders here look forward to, an increase in earning more dividends, but a simple reason that if this reworking, which you say is necessary, is a part of the expenses that the company has to suffer, to what extent, I wonder, are you able to move forward with what you're planning and what can we look forward to in it all?
Thanks, Mr. Ellison. I think you're referring to the comments that were quoted or attributed to me in a newspaper article. And the comment, but yeah, the focus for the business, Mrs. Martin has a phrase that she uses called brilliant at the basics. But what I was saying in that article was every time there is rework, every time there is a customer experience issue, it also, I was trying to say is it's not like we have a trade-off between risk management, operational control, customer experience, and cost. If we actually reduce one debit card replacement, and that was the example I used, was if one debit card didn't have to get replaced earlier, it means we save the cost of a piece of plastic, we save the cost of mailing the customer a debit card, we save the cost of a customer coming into a branch an associate of ours serving that customer, trying to do, spending time serving a customer on an activity that the customer didn't want to come into the branch in the first place for, which would be to get a replacement debit card. So I use that as an example so that all operating, basically anything that is not working well, that doesn't work well. Every time we improve the quality of our operations, we reduce cost, we improve customer experience, and we reduce operating losses. And as Mr. Sadler alluded to in terms of progress, which was your question, you will see that for example, over the last couple of years, our ABM service levels are much higher than they've ever been before, and we are typically around the best in the country on our ABM service levels. So that's an indication of a reduction of rework. The same thing happens on our debit cards and our credit cards. You would have reducing fraud incidents, reducing phishing and smishing. So we've made a tremendous amount of progress in that. And on the operating losses, as Mr. Sadler indicated, and if you looked at it on a quarterly basis, you'd see a decline in our operating losses in our financial statements as well. So we've made substantial progress. Having said that, there's a long ways for us to go as well. And it's that focus on actually just improving quality assurance, quality control in the business. Again, as Mrs. Martin says, brilliant at the basics. And every time we do that, customer experience will go up, costs will come down, and operating losses would decline, and credit losses would probably get better as well.
Yeah, clearly, the dividends are a function of the earnings and the reduction in costs that are so important to all of us. And the other thing I wonder, is insurance part of the huge fraud losses that the banks seem to suffer these days? That is, can those losses be insured? Can they be handled in any other way?
You can insure against anything. It can cost more money. It's better to try and reduce the loss. And by reducing the loss, then we don't have to pay the insurance premium. And the insurance premium is very high if your controls are weak. So we'll stay with the focus on brilliant at the basics, tightening up our controls, just the focus you've seen today, whether it be from the top down, board governance, strengthening controls all the way through the business, continue on that journey. But then we have much less requirement for insurance. But we already have various types of insurance against losses, including operational losses, fraud losses. Sorry.
I'm glad you mentioned that. The one thing
So,
that
Mr. Elston.
is so important, I'm just finishing here. The one thing I think is very important, get our staff to recognize that each saving that they do, or anything that prevents this kind of a loss, is so good for them and for everybody else. Thank you, CEO.
All right. Thank you, sir. Question from online, all right. I was going to direct it to Mrs. Martin, but she's got up at the minute, so I'll come back to this one. Another one here for Mr. Almeida. Rosewell Campbell is asking, is NCBFG planning on listing on an international stock exchange in America? If it is possible, how would you be structuring your group financial outlook to meet their standards?
So two parts to that answer. First, no current plans to list on an overseas exchange. And in terms of our financials, if we're not planning to list, that wouldn't be fully relevant, but it is important to understand that when we did the 144A, and our financials are a substantial way towards actually complying with those requirements, and that is also part of us being able to do the international bond offering, and which would be, I think, well, if it wasn't the first, first one for a financial institution in the region.
All right. Thank you. Rob?
Hi, good afternoon. My name is Michael Hendricks.
Yes, Mr. Hendricks.
Robert Almeida, I would like to bring this question to you, sir. I have three questions, right? What of them is
No,
about
Mr. Hendricks.
I will be
sorry.
brief, Mr.
No.
Garcia.
One. And let me just tell you why. Because we are running out of time. Already we've had some of our directors who have had to leave to catch flights.
Okay.
And the chairman also has some limitations on his time.
Okay, all right.
Yeah?
Mr.
So one
Alminia,
question. Thank you.
I have some funds, you see, that was stolen from my account, from the bank, you see. The bank bought a truck for me, okay? And I paid on the loan and give them a check for 850,000. No money went into my account, okay? And I brought the matter to Mr. Leachin some years ago, and he pointed me to Mr. Patrick Hilton, but Mr. Hilton refused from dealing with the matter. He indicated that Mr. Leachin is not the owner of the bank and could not have sent me to him. Anyway, Mr. Leachin sent me down to the bank at halfway through, and I went down there. And then the bank sent me to a company that buy bad loan, okay? And them send me back to the bank. I'm having a little issue now with the bank manager, Mr. Graham. Mr. Graham, at halfway through NCB. Miss, I have been doing that, Miss. Okay, after. Mr. Alminia. What Mr. Graham now is indicating to me for me to get my money is to get a lawyer to write him. He knew about the loan because when I was getting the loan and when I paid the check, he was a loans officer at the time at NCB. I cannot get a lawyer to do what he's asking, okay? Another thing, I invested about $3 million in Edward Gale and Company. NCB bought that company some years ago. It is now NCB Capital Market, okay? Apparently, one Miss Claudette Cooks, she was supposed to give me some shares in Cable and Wireless, which is now Flow. And until that time, I haven't received it. She now is telling me that the only way I can get my $3 million worth of Flow investment is if she coming back into NCB. And she don't know she's going to reach in there. So
all right,
she's telling
Mr.
me in a
Hendricks.
nutshell, what she's saying, my investment is still at NCB Capital Market.
Yeah.
But she can get it, but she have to be in there.
Mr. Hendricks, thank you very much for your question. Now, I know that we've had questions from you in respect of matters that are specific to the relationship that you have had with NCB at past AGMs as well. And as indicated on those occasions, any relevant investigation would have been done, and I believe that you've got a response. If you have a new issue that you're raising, please ensure that you send it in. However, this is not a forum in which we can respond to individual matters that are the subject of privacy and confidentiality obligations. Can we have the next member's question at this time?
Good afternoon. My name is Claudine.
Elaine Browers.
No, we're having a question over on this side.
All right. I was told that I would speak after the second person.
I'm not sure who told you that. I'm not sure who is saying it, but we're now recognizing this lady on this side.
Michelle, shareholder
Yes, Ms. Mitchell.
and customer. I recently went to the Bank on the Go in Portmore branch, and I was having a lot of problems lodging my cash. The machine keeps putting them back out. So I was there about 5 minutes trying to lodge. So I'm asking if the bank do regular maintenance on these Bank on the Go machines.
All right. I think the answer is straightforward is yes, but let me see if our head of payments and operations, Danielle Cameron Duncan, I know she loves the microphone and she'd like to have the opportunity to just say something in response.
Good afternoon, and thank you for the question, and our apologies for the experience that you're having. So in short, as Dave would have said, the answer to the question is yes. So there's a regular maintenance schedule on all of the ABMs. We would have done a significant amount of work in terms of changing out and upgrading the ABM fleet that we have, almost 50% of that fleet is upgraded with additional deposit machines. So the issue that you're having really is related to notes quality, and we're doing a lot of work in terms of upgrading the machines to adjust for deterioration in the note quality over time. So we're very aware of it. We're implementing the fixes for that. And so you can expect to see an improvement in the coming quarter in your experience at our ABMs.
All right. Thank you, Ms. Cameron Duncan. All right. I know I was hearing someone else who had indicated she was told she was next. No, it was not your voice, Mr. Young.
Thank you.
Thank
Elaine
you,
Browers.
Mrs. Clark.
Good
Allwood.
morning, everyone. I
am not seeing.
I'm asking if it is possible that when the persons giving out the folders could check to ensure that everything that one should get is in the folder. Secondly, some senior citizens are technologically challenged. So it would be very good customer service if you could provide them with hard copies of the annual report. And thirdly, I would like to know if the $121 million are US or Jamaican dollars.
All right. Thank you, Ms. Elaine. What's the last name, please? Browers. Thank you very much for your questions. I'm not sure I understood the first one in respect of the folders. With respect to the, are these the folders that are available?
I got a folder with one piece of paper.
Yeah, the agenda.
And when I went back, I was told that there were no more agendas.
Oh.
And there were no more of the hard copies of the annual report. And
all right.
If
so,
you could provide access to Wi-Fi, then those who don't get the annual report could access it on the internet on their phones.
Yeah, so that actually is available, and in addition, persons are able every year when we circulate the annual report. It comes out every year in January, and if you'd like a hard copy, you can always request one as well. So that can be provided ahead of the meeting. With respect to the 121 million, yes, it is Jamaican dollars. Yes, on this side. Oh, I'm sorry. Before, yes, Mr. Young, and then we'll come to Mr. Golding over here. All right, so.
I am before Mr. Young.
I'm sorry? Yeah. So, Mr. Young, if you don't mind, I'll take you afterwards, and then Mr. Golding, I will come to you.
Sir, I was before Mr. Young.
Yeah, please go ahead.
My name is Lancel Bloomfield, and the question I was asking previously is this. Page 19. Your net loan amount stands at 618 billion. What percentage of this falls within the category of non-performing loans? That's page 19 of your annual report. And that little graph there.
Okay, so you want to know about the non-performing loans out of the overall?
Out of the 618 billion.
All right. 4.5%, Mr. Sadler says.
4.5%.
Percent.
Approximately.
Thank you very much. Thank you.
All right. Thank you. Mr. Young. No, Mrs. Clark Allwood.
I was a movie star, so I am back.
No, but Mrs. Clark Allwood.
I have a commendation, I have a recommendation, and two questions. So the
Yes, so we'll take the commendation and the recommendation and one of the questions.
Oh, Lord. So
because we're on, you see this line over here?
Borrowed time, yes.
Right.
Thank you, sir. I again am saying kudos to you for having that glossary at the back. I think it's an educational tool. Please keep it going. Yes?
Thank you, ma'am.
All right. The recommendation is please have minutes of the last meeting available in hard copy. There's none available.
Okay,
Right.
we can arrange that for next year.
Okay. Back to the assets. Here's my question. Can the matter be challenged in the court? Maybe
What is
that's
that?
for the attorney at law over there.
You mean the asset tax?
Yes.
Oh,
Because, I mean, if it's temporary, certainly that word should count for something, that weight.
all right. Well, I don't know if there is any attorney who is looking to give legal advice on it in this public forum.
Okay, so I leave it up in the air. And for your articles of association, is 75% independent board members in there? Is that allowable? I've never heard it before, and
Yeah.
I'm asking now.
No, the articles do not specify a percentage of independence required.
No, that's not it. Having independent board members. That's
Yes,
fine.
the articles do not specify that
So,
requirement.
is that all right?
Is that?
Is that all right to have them, and it's not in the articles of association? I'm asking.
Oh, certainly.
I see. Can
Okay.
I get a copy of that article?
The articles of incorporation?
Yes.
All right, so those are available online as well.
I know, I
but
am not
you
an
can.
online body.
I knew what you were going to say. Yeah, we can provide you with a copy. Yes, all right, Mr. Young.
Yeah. Hear me out, Mr. Chairman. In the 90s, you see, you're talking about corporate governance. Hear me out, people. In the 90s, NCB was my favorite. You know why I say NCB was my favorite? Angel performed good. When you talk about shareholders meeting, and everything was good. The bank was running good. All of a sudden, in 2000 something, it's not going good. You understand what I'm saying? So back to the dividends. So, I would like you to get a 7% dividends on the next payment, dividends payment. Please and thank you.
All right, thank you, Mr. Young. Mr. Golding.
Thank you. I've been around as I look around the room for a very long time, because I joined Barclays Bank, which is the bank that preceded NCB in 1962 on the 10th of December. I have been around when the share value on the market was over $240 per share. What you will find that if you understand the business in which we are operating, essentially we're in banking and wealth and insurance. Those two call for confidence and trust. Those businesses are built on that. So what we need to do to have our organization return to the organization of choice in Jamaica and the rest of Caribbean and wherever we operate is to rebuild the trust and confidence of our customers and our staff so that we'll be the bank of choice and the insurance company of choice. We commend you for the action in appointing a CEO of the bank from within who has come through the various aspects of banking and understand our Jamaican people and the rest of the Caribbean Cayman has confidence in that. What we need to do, and the board should be ensuring that this is done, that the confidence is inspired in every branch where we operate. Every branch across Jamaica, across
Cayman. And this must be felt by the customers, their experience. So if we can focus on rebuilding that excellent servicing at the points where it matters most, monitor those who unanswer the phones, because there's where we are meeting and interfacing with the public. So we're not begging them anything. We are here to serve. So we need to focus on those. And the profits will come back. People will bank in NCB. People will do business with Guardian Group as you never thought it would. So focus on those elements. Okay, I've had the experience of being a director of NCB Group, NCB Bank, and 32 other subsidiaries of this bank. And over the years, it pays rich dividends to focus on your customer base. Don't let any of these just come around banks take away one of your customers. We need to build the customer base. We need to focus on the staff, ensure that they are serving the customer base. And all will right itself with the board of directors and their chairman. We'll be happy to looking at $50 per share dividend, not 50 cents.
All right. Thank you, Mr. Golding, for those remarks. All right. We're about to wrap up, so we'll just take the questions if they are brief from the two persons who are here standing.
Brief question. Lincoln Coke, shareholder and customer. Omni statement. Omni statement I used to get through the mail. For the last couple of years, no statement. I have no problem going online or wherever, but there's no online statement available. I had to go into the bank last month to get my statement. I was told that Omni is now with Guardian. And as a result of that, Guardian does not have the facility to give online statement. Or you can look up online. I want to know what the situation with that.
All right, we can have somebody assist you afterwards, but as I understand it, those statements are now emailed. Is that right?
No, it's not.
Or ought to be. Okay, we'll have it addressed afterwards.
And also, Guardian life insurance statements are not available online either. I'm a customer of Guardian Life also.
All right, I'm not seeing Megan here.
You have to go in the back in the.
I'm not seeing Megan. She stepped out. All right, give us a minute to get the Guardian Life president back in the room, hopefully, so that she can address it.
I don't know.
All right, can we take the next person in the meantime?
Thanks, Marlon Blake. So, could you turn to page 24 and 25 in the annual report? And then I want to zero in on the return on average shareholders' equity, as well as return on average total asset. So as we can all see, between 2016 and 2019, the return on shareholder equities was ranged from 15% to above 20%. In last fiscal year, 2025, it was 12.46%. And that also is a bit abnormal because it includes the $15 billion gain on the share of the subsidiary. So if you remove that that extraordinary item, then the return on shareholder equity would be somewhere 8% or lower, right? And then the financial result that you guys published yesterday, obviously the profit, the net profit was, earning per share was $1.05. So as we can see here, the return on shareholder equity is trending down. Has been trending down. I know we had COVID a few years ago, but COVID has ended, and I was expecting things to turn around significantly. And also, even though the asset of the company has significantly improved between 2016 and 2019, as you can say, the return on asset has been significantly higher than what it is now over the last couple of years. So, and one more point I need to make before I ask the question. So, if we look on the following, if we look on the next page, you can see the share price.
Sorry, Mr. Code, this is not a brief question at all.
No, I need to provide context. I mean, I need to provide more context. So if you look at the share price, right? If anybody had bought NCB share between 2017, when the share price was, I think, $87, and 2025, except the few weeks when NCB had the debt restructuring issue, when the share price went down to $30, if you had bought NCB share anytime within the last 9 years, except those few weeks, your return would be actually negative, right? And then with a dividend yield of 0 to 3%, as a shareholder or investor, you're basically getting a negative return on your investment. So my question is, and I want to make one more point, because earlier during the presentation, I realized you guys present and it sounds good, like you guys are doing exceptional, but in my opinion, I mean, based on what I just said, it seems like you guys need to do a lot more. And it also means that in order to reach back that level 5 or 10 years ago, obviously revenue needs to be increased significantly so that net profit can be increased significantly so that shareholder values can increase significantly. So my question is, what are you guys doing to actually improve significantly shareholder values?
All right. Rob?
Thank you for the question and the observation. And you'll be able to notice that, you'll actually be able to notice that the targets that I articulated of getting the 15 to 20%, it's about getting back to where we were, because obviously we went way down, right? So we, as you point out, up to about 2019, like 2015, 16, 17, there was a certain level of performance in the business, and then things kind of went way bad, right? And then you look at the last 3 years and you'll see a continuous rise. And granted, the 1 year, we had the one time that I mentioned the core performance. You'll recall in answer to an earlier question that if this year is the same as last year on core, then we will actually be achieving that again in that type of ROE level, not where we want to be at the 15 to 20, but get to there. And that is so just validating what you said, 15 to 20 is the range we should be at in return on equity. In terms of what do we do to keep improving that? Mentioned again earlier, it's about bringing the debt down. As the debt comes down, the interest cost goes down, so that increases our profitability. And on the other side of it, it is reducing the amount of expenses in the business, both efficiency as well as operating losses and things like that. So we tighten up the business from a control perspective, improve the efficiency. That causes the profitability to go up, bring the interest cost down. That causes the interest cost to go down. That widens the profitability and would return us back to the levels that we had before. Yep.
All right. Thanks, Rob. Our final question, and we will come back to answer the one in respect of the Guardian Life statements after.
Hello, my name is Keith Collister. I'm chairman of the ATL Pension Fund. The question is for Gary Brown. Basically, what I want to know is, can he compare the situation in Jamaica with respect to capital to asset ratios and its impact on dividends with the situation, say, in the US or in Canada? It seems to me that what you haven't really addressed today is the impact of that capital issue on the dividends, and that would allow much higher dividends much more quickly. So I'm sure, based on his international experience, both in the US and Canada, I assume, with CIBC, I am sure he has some thoughts on that, and I think they would be relevant at this time. So that's the question. And in fact, if he wants to address the issue of the recent US 144A and whether that could be refinanced, because that seems to me also, being in US dollars, potentially to impact the capital of the entity, and whether that could be refinanced perhaps by some friendly multilateral, as a Jamaica dollar deal, as was just done by CAF recently, following the Jamaica's own issuance in this nature. So that's my question.
Is this on yet? Okay, thank you. Yeah, well, thanks for those questions. They're excellent questions.
All right. So, members, can we have some silence in the room, please, so that we can hear the answer to the question?
So the bank here in Jamaica is actually a well-capitalized bank. It's quite strong. We have a lot of very, very positive attributes in this market, being a leader in the market itself. When you compare us with United States banks, which I'm more familiar with, you'll see that we're like a lot of the mid-cap banks in the United States. I think the difference is that they have, most of them have very stable markets with a lot of, when you're within the United States, you're not experiencing as much foreign currency kind of sways and other things like that that affect outcomes of your financial results. So there's a little bit of difference. Plus the markets in the United States they're just much larger. When you look at a bank like ours, which is principally focused here in Jamaica, you have these extraneous factors that do affect it. But it's not something that I would be concerned about. When I look at all that I've seen in the last 2 years that I've been associated with the firm, what I see is a really good bank, a bank that can be a successful bank from a shareholder's perspective if we run it better. And we've gone through a period where things weren't run as well as they needed to be. And we've had lots of operational issues, operational losses that obviously drag down the returns of a bank. But what I see is a bank that I've got tremendous optimism about, because we're on a good path. We have an ability to make the changes that are necessary to actually get us to those stable earnings that we haven't seen. So I think NCB is extremely well positioned, but I also think that we still have challenges because of the market that we're in. You spoke to the 144A offering. I mean, that is a tremendously successful offering. A lot of people will complain about, oh, the price was too high, you paid too much. But we opened up a brand new financing market, an international financing market for this bank that's based here in Jamaica. That was a tremendous achievement. Over the course of time, as our financial results improve, we will be able to re-tap that market, hopefully at much better rates than we had at the time that we went to the market. But for us, opening the market was the major achievement. Having the ability to go seek financing internationally for a bank of our size, as a mid-cap bank, effectively, is a very, very significant achievement. So I would say that we are well positioned. We need to, as our CEO has explained, we need to redeploy our capital and reshuffle it a bit within the organization to make sure that we're getting the most efficiency out of it. But I am quite confident that we're on a good path in order to do that, and I look forward to this next year and seeing some achievements in there.
All right, thank you.
Keith, sorry if I just add one thing for you, Keith, because you asked about the cross-currency exposure basically by the U.S. financing. The business overall, because our assets are all, like we've got Clarion, we've got we've got the Dutch Caribbean, and then we hold U.S. dollar assets. So overall, even with that debt, we're net long U.S.
Ladies and gentlemen, this brings us to the end of the Q&A session. Where possible, we will reach out to those persons who did not receive a response to their questions submitted, whether online or in person. So, Chairman, I'll now hand over to you for you to take the meeting through to its close.
Thank you, Dave. Ladies and gentlemen, you have been most patient. You have put forward some great questions. We have taken into account all the suggestions that were made. Theo, thank you very much. It's great to see you here again this year, right? Theo goes back, as he said, decades. He precedes NCB to Barclays. Board members, I really must say a special thank you, because I know you've worked very hard to correct a lot of the ails that we have experienced, are experiencing, and we continue to be sensitive to all the issues pertaining to customer service, and I'm here to commit to you, recommit, that we will continue to be as assiduous as we possibly can to deal with the issues, to swat every fly, because we are 100% aligned. We want to make sure that NCB be that citadel on the hill that we'll all be proud of. Thank you very much. Meeting adjourned.
At NCB Financial Group, we remain proud nation builders, committed to empowering people, unlocking dreams, and building strong, resilient communities across the region. The momentum we achieved in 2025 financial year was not accidental. It was the result of an unwavering commitment to our operational framework of efficiency, governance, and customer experience, EGC. In a challenging and evolving economic environment, we remained disciplined. We reinforced our core. We fortified our systems. We strengthened our strategic posture. This focus delivered results and showed strength in consistency. Our cost-to-income ratio improved to 64.29% from 73.56%, a reduction of 927 basis points. Our return on equity increased to 12.46%. Our consolidated net profit grew by 71%, reaching $36.9 billion, the highest on record. This growth was influenced in part by the gain from the sale of a subsidiary, as we continue to streamline operations and sharpen our focus on our core businesses. But financial performance alone does not define progress. Throughout the year, we remain guided by our 4 strategic pillars: strengthening customer relationships, delivering as a one-stop shop, optimizing efficiency and productivity, maintaining world-class standards. To drive operational efficiency, unlock synergies across subsidiaries, elevate service delivery, and enhance the group's ability to deliver consistent value to customers and shareholders, we established 2 strategic centers of excellence across NCB and Guardian: the Investment Management Center of Excellence and the Pension Fund Administration Center of Excellence. We also diversified our funding profile through the successful issuance of a $225 million senior secured note in the international capital markets. At the heart of our strategy is a clear belief: financial performance must translate into real value for customers and sustainable returns for our shareholders. Across the region, we continue to support wealth creation, helping individuals, families, and businesses build security, grow assets, and realize their aspirations. Through the NCB Foundation and its partners, we raised $459 million for the Hurricane Beryl recovery efforts, advanced education, and healthy lifestyle programs through the Guardian Group Charitable Foundation, and promoted environmental sustainability through the Clarion Foundation's tree planting and conservation projects. We thank our customers for their trust, our employees for their continued commitment, our suppliers for partnering with us to deliver excellence, and our shareholders for believing in us and staying the course. As we look ahead, we do so with confidence. We are more resilient, more disciplined, and better positioned for future success.
Secure protection and possibilities with Guardian Investor Plus. Explore the benefits of investment with life insurance and start planning for that exotic vacation, your first home, education, or even retirement. Living easy is within reach, and Guardian Investor Plus does more to help you get there. Contact an insurance advisor at 876-927-4105 or visit myguardiangroup.com.
Are you prepared to make the most of your golden years? With the NCB Pensions Portal, you can safeguard your future with ease. Access safe retirement planning opportunities anytime, anywhere. Enroll in a pension plan, manage your investments, adjust your contributions, enjoy a world of convenience as you step into the future you desire. Log on to a better tomorrow. Visit smart.ncbinsurance.com to start planning now.
In a world where scams lurk around every corner, NCB is working tirelessly to protect you. Beware of red flags such as scare tactics, too good to be true offers, and fake transaction alerts. Remember, NCB will never send links or buttons through texts, WhatsApp, or emails, and NCB will never contact you to ask for your PIN, password, RSA token, or card number. Don't fall for fraud. Visit jncb.com/protect yourself.
We know what you want. A little bit of fun. A little taste of adventure. You want joy. You want passion. Of course, security for you and your family. You want experiences that will last a lifetime and all your dreams turn to reality. To get exactly what you want, you need Clarion Plus. Our suite of tailored solutions and curated experiences gives you the freedom to shape Clarion the way you need, so you can build your life the way you want. Clarion Plus.
In 2019, we gave